Welcome to Ada 247 JAIIB PPB English Medium channel. Today is a big day for all those students who are having the PPB exam this Saturday because we'll be starting off with the Maha Marathon for English Medium. And when we talk about the Maha Marathon, what is the motive? What is the objective we are talking about? Objective is very simple. Whatever we have done till today, till the various sessions which we have seen in the past week, or for that matter past months, we will be consolidating everything, fine, everything which is important. So this session clubbed together with the Maha revision which will be coming tomorrow, you will have entire syllabus with you. Okay, so if you have any doubts, any type of difficulty you are facing, any kind of fear you have, do let me know in the comment section, and also confirm whether AV is fine or not, right? Everything is okay. I have checked at my end. You guys also confirm. And one thing which I expect from every student, that everyone must reply. Fine, they must reply. They must participate in this particular class, because only then the 100% efficiency, or for that matter 100% outcome of this class will be there. Okay. So as I can see, students are there now. They have started to come. Good evening everybody. We have Rajesh, Gopal, Naresh. Okay, so everyone, let's then start our class with the first question, right? So we have segregated various modules, and based on that, whatever we have done in the past 4 days on this YouTube channel, we have what's the particular important topics with us, but some topics we will be covering in the next class also. So combined together, Maha Marathon and revision will give you the maximum syllabus. So let's start our discussion with the first question in front of us based on the KCC limit. Fine. This exam of PPB, whether it will be easy or difficult, it will be determined by one module only, that is module B, from where you will find the numericals, fine, the formula based question, the case based questions. Module A, number of questions might be more, but the level of difficulty cannot be made higher as compared to module B, where the scope of asking difficult question is immense. So we'll be starting off with some basic questions, then moving on to some difficult ones also. Try to answer this question. A farmer's KCC limit crop loan component for the 5th year is 4.5 lakh. The bank also sanctions a term loan component of 6 lakh for the tractor and 1.5 lakh for a dairy unit, both to be availed in the first year itself, right? What will be the maximum permissible Kisan credit card KCC limit for the farmer? So KCC limit, every time they ask at least one question from the agri finance, fine, but the difficult question will be to answer that what will be the MPL, right? MPL is what makes the question difficult. So we have what? The KCC limit for 5th year, it is given as 4.5 lakh. Then we have the bank also sanctioned the term loan component, fine, so TL is also there as your 6 lakh for the tractor and 1.5 for the dairy unit, fine. So TL1 and TL2, they are what? 6 lakh and 1.5 lakh. What will be the maximum permissible Kisan credit card limit for this farmer? Good evening everyone. This is a fairly simple question, right? You just have to add. Okay, no need to calculate anything else. Simple addition you have to do. But the question will become difficult in the upcoming 30 or 40 minutes. Fine. So what will be the right answer here? Everyone, simply add all these, right? So 4.5 plus 6 plus 1.5, that is what we have here. So the right answer will be what? 12 lakh. Fine. So 6 plus, this is what? 4, 5, 6, 12. B is the right answer. Okay. So such questions, what should be our target to solve within 3 seconds? Right? If we know that what do we mean by the MPL, or for that matter how we will be arriving at the MPL, it is a very simple question, 3-second question I would say. Although they have asked this question for 1 marker. Okay. KCC crop limit has been given as 4.5 lakh. The 5th year limit is there. When we talk about the 5th year limit, if it is given, then we will consider that only. Fine. We won't be considering first, second, third, or 4th, because ultimately the maximum limit will be mentioned in the 5th year itself. Tractor term loan 6 lakh is given. Dairy unit term loan is 1.5 lakh. Simply add all these KCC along with the term loans which the farmer is having the exposure with the bank, and you will get 12 lakh as the right answer. Okay. Yes, good. 12 lakh is the correct answer. Now, Let's move on to one case. Fine. Eligibility criteria for the DDA scheme. So Sparkle Gems Private Limited is a Surat-based jewelry firm specializing in the export of meenakari and diamond-studded gold jewelry. The company imports rough diamonds from Botswana, processes them, and exports the finished jewelry to retail chains in Europe and US. So one Surat-based firm doing what? Exporting some type of jewelry. Fine. The firm was established in April 2022. Since its inception, its annual turnover has been, for FY 22-23 it was 6 crore, 22-24 it was 8 crore, and 24-25 it was 10 crore. Fine. To avoid the constant fluctuation of the INR against the US dollar, the directors of Sparkle Gems want to open a DDA, Diamond Dollar account, to pay their international suppliers and receive the payments from the overseas buyers directly in dollars itself. Fine. So prima facie it feels that we have to do what? We have to do away with the exchange fee. Based on the eligibility criteria for DDA scheme, is Sparkle Gems Limited currently eligible to open an account? What are your views here? Yes, because their average turnover exceeds 5 crore. Whether the average turnover has exceeded 5 crore or not, 6, 8 and 10 over the past 3 years, if you see, definitely it will exceed 5 crore, right? No, because they deal in meenakari jewelry, which is not covered under the scheme. So meenakari jewelry is there, right? In DDA scheme, we have seen such questions. Then we have no, because they do not have the required track record of at least 3 years in the import or export business. At least 3 years we are talking about, minimum 3 years. Yes, because they have been operating for at least 2 years with a growing turnover. So both the situations must be there. Both the conditions must be met. Then only we will be saying that this particular firm will have what? It will have the final answer. So what is the right answer here? So it started off in 22-23, fine. Then we have 22-24, and lastly the 24-25 is also there. So at least 3 years is there or not? Yes, 3 years and 5 crore will be there. Yes, A is the right answer. It will be yes, because their average annual turnover exceeds 5 CR. Good. Okay, A is correct. Fine. So at least you should be having the track record of 3 years in import, export of jewelry, colored gemstones. Fine. Then average annual turnover should be 5 CR or above during the preceding 3 licensing year. Fine. So thanks to that, the correct answer will be option A. A is the right answer. Now, next question. Let's just talk about some basic aspects also. We should not focus only on the cases, some basic things also, because PPB will be a mixture of both. So, here are some banking concepts. You have to tell which of the following is are correct. The maximum punishment for a money laundering offense can extend up to 10 years if it is connected with the Narcotics, Drugs and Psychotropic Substances Act. Yes. Normally it is what? 7 years, but extendable up to 10 years in case of your narcotic drugs or psychotropic substances. The Banking Codes and Standards Board of India, BCSBI, was recommended by a committee headed by Shri S.S. Tarapur to address the issues of banking services for the common man. Yes, for the common man we had this. Then we have the cross-border wire transfer report, CBWTR, must be submitted for any wire transfer regardless of the amount. Any kind of amount, no threshold is there. Whatsoever amount is there, you have to generate one CBWTR. In a mortgage, the security is movable asset and possession usually remains with the borrower. What will be the right answer? Yes, fairly doable question. For the DDA, it was option A. Fine, option A. Do not go by this. Fine. Let me just amend it, otherwise it will create further confusion. A is the right answer. Okay, A is correct. Fine. What about this question? The maximum punishment. Yes, the particular BCSBI was recommended by a committee headed by S.S. Tarapur. Yes, CBWTR must be submitted For any wire transfer, no. Some specific limit is there. And what is the limit? What is the limit? Everybody, we have seen this question this week only. In this week only, we have seen this. In a mortgage security, is a movable asset? No, it is an immovable asset. So 3 and 4 are wrong. 1 and 2 is the right answer. That is option A. Okay, A is correct. Fine. So 5 lakh, this particular amount, if it is pertaining to 5 lakh or above, you have to provide the CBWTR by the 15th of next month. 15th of next month. We'll be seeing questions based on the transfer on your various report obligations in the upcoming questions. So yes, you must answer those as well. Those are also very important. The STR, the cash transfer report, cash transaction report, the CCR, counterfeit currency report, very important. Then which of the following statements is correct regarding the RBI Ombudsman Scheme? RBI Integrated Ombudsman Scheme 2021. Okay, not an issue. So try to be very careful. That is the message which I want to share with everybody, because sometimes in the exam we feel that question we know, we also know the statements, but what the statement is asking, or for that matter, what the question is demanding from you, all these things must be kept in mind. Okay. So RBI Ombudsman Scheme integrates 3 separate Ombudsman schemes, all of which were established in 2021. No, they were not established. All of them were not there in 2021. Since 90s, we have various schemes. It combines the Banking Ombudsman Scheme in the operation since 1995, the Ombudsman Scheme for non-banking financial companies, NBFCs, and the Ombudsman Scheme for digital transactions 2019. The Ombudsman Scheme for digital transaction also. So gradually we expanded the operation, or for that matter, the scope of the Ombudsman Scheme, starting from the NBFCs, the normal ones, and the digital transaction as well. Okay. The scheme's primary function is to handle grievances related to large non-banking financial companies only. No, not only for NBFCs, but for the banking industry overall. The Banking Ombudsman introduced in 2021 as part of new integrated scheme. Whether it is correct or not, no. It was not a part, it is actually the ultimate scheme. So D is also wrong. Correct answer stands at option B. We had 3 schemes. What 3 schemes? The Banking Ombudsman Scheme of RBI 1995, the Ombudsman Scheme for the NBFCs 2018, then we had the Ombudsman Scheme for Digital Transactions 2019. These were the 3 schemes which were ultimately merged with the RBI OS. Now, let's move on to some simple questions. Which of the following is our correct statements in terms of inoperative accounts or the unclaimed deposits? In case of unclaimed deposits, you must remember that the most important thing is your DEF funds, right? We'll be doing question on the DEF funds also. But let's now, right now, just focus on this question. Correct statements you have to tell me. No interest on saving bank should be credited. No, you will be having, right, the interest rate. Penal charges for the shortfall in minimum balance should be levied on inoperative accounts. Shortfall in minimum balance, no, it's already an inoperative account, right? If the TD matures and the proceeds are unpaid on the unclaimed amount, the saving bank rate or the contracted rate on the mature TD, whichever is lower, will be applicable. So what is the right answer? Yes, good. Only third is the correct answer here. Rest 2 are the wrong statements. C is correct. Good. Then, in case of HUF, which of the following is are correct? So in your module A, they will ask such easy questions only. Fine, easy to maybe moderate. Some questions might be moderate nature also, but more or less they ask about the rules itself. So which of the following is correct for your HUF? Elderly male member of HUF is known as Karta. Karta is also known as manager. All the other members of family, including married, unmarried daughters of the family, are known as co-parceners. Eldest female member of HUF can also be the Karta. What is the correct answer here? Everyone, for this question? HUF, it should be imprinted in our mind that every statement is correct, right? Elderly male, yes. HUF, Karta. Karta is also manager, yes, correct. All the other members, including your married and unmarried daughter, co-parceners. And when we talk about Karta itself, eldest female member, can they be also Karta? Yes, absolutely. So correct answer comes out to be option D. One more thing, whenever the account is opened, what is the role of Karta and what is the role of co-parceners? Whether only Karta will be signing on the account opening, or for that matter, other banking papers, or co-parceners will also be signing. Who will be the particular head who will sign? Either Karta or all of them. Do let me know in the comment section. Fine, D is the right answer for this question. Fairly simple. Which documents are required to opening of an account of your club, association or unregistered body? So opening of account, what all documents you require? Current account opening form signed by all the managing committee members. Specimen signature cards signed by authorized signatories. List of beneficial owners, if any, and they will be having the documents. Fine, all the particular document, it must include the list of beneficial owners as well. What will be the right answer here? Yes, for opening the account of club, association, registered body, all these current account also, fine, the current account opening form, then specimen signature, the cards, the SS card signed by all the authorized signatories, and the list of beneficial your owners also, if at all it is present. So unregistered partnership firm, as we have seen that beneficial owners are there, so you have to submit that as well. Correct answer stands at option D. Yes, D is the right answer. Then a bank can exercise its right of journal lien under the section 171 if the goods are received in normal course of business, in the capacity of the banker, whether as security for loan or for safe custody, or the loan is due for recovery. The journal right of lien, when it will exercise. Yes, good. We have Ramesh Babu saying 15%. Absolutely right. Good. So what is the right answer here? Journal lien 171. So whether the security for loan or for safe custody, fine. If the particular asset, or for that matter amount, is for the security of a particular loan or for a safe custody, do you think that it can be treated as a journal lien and the bank will exercise the right over that? No, C is wrong. Capacity of the banker, yes. The goods are received in normal course, yes. And the loan is due for recovery. These three conditions are met, then you will say that yes, we will be talking about the journal lien right of the bank. Whether as security or for that matter safe custody, if a particular asset is there, or for that matter some documents have been provided for the security of, let's suppose, home loan, you cannot exercise the right of journal lien over those documents, right? So C is wrong. Correct answer is option C. Right? This small c is wrong. Correct answer is A, B and D only. Okay, fine. The rate of stamp duty on the agreement, very common question. Fine, they will ask you in alternate exam shifts also, that what will be the stamp duty, the rate of the stamp duty on the agreement. Okay, Devraj, one thing you can do, that go to the link which we have provided. Fine, one link we have provided in the short. Fine. So directly from that link, you can copy that link and paste on the Chrome. You will have the ultimate page opened, and there you have to first fill your registration number. Fine, registration number, once you fill there, then you will be having the option of your exam month and then your center also. Right, what is the right answer? Stamp duty agreement, it will be varying. Fine, variable rate we have, A is the right answer. Good. Then what is the time limit for making a demand for payment under the section 138 of the Negotiable Instrument Act? Yes, varies from state to state. Negotiable Instrument Act, everybody, section 138, we have seen that the returning of check. So 15 days from return of the check, 30 days of return of check, 60 days or 90 days. What will be the right answer here? Fine. So these are what? 1 marker question. They have asked it for 1 marker and sometimes 0.5 marker as well. So such questions within 5 to 10 seconds we have to answer. So correct answer will be what? Time limit for making the demand for payment is 30 days. Fine. 30 days will be the right answer. 3 months, right? 3 months. when you talk about the section 138, the time limit for making a demand for the payment, it will be 3 months. Yes, 3 months will be the right answer. Okay. Yes. Fine. Among the given, which section of NI Act provides that the minor may draw, endorse, deliver, and negotiate a negotiable instrument? As such, a minor can draw a check. So, what will be the right answer when we talk about the minor operations? Fine, minor doing such operations. Minor doing the operation. The check operations are fairly common, fine, for the minors. This we have seen in our, I think, revision, your mini marathon also. The concept we have tested there also. What will be the right answer? For the minors, everyone. See, everyone must answer. These are fairly doable questions, right? For the minor, which section we are talking about? It is section 26, right? C is the right answer. Again, C is the right answer here. Now, next question, pledge, hypothecation and mortgage. We have to distinguish between these. No. See, in this question, the right answer will be B. That is your 30 days. The overall demand, I was saying that 3 months. Fine. Once you hold the check within 3 months, fine, you can demand from the date which is mentioned on the check. That is the 3 months I am telling you. 30 days because section 138 talks about what? Dishonor of check. Fine. So dishonor 30 days. But for the demand which we were discussing about, it is 3 months. Okay. For this question, B is the right answer. Okay, so don't get confused. Section 138 is for dishonor of check. But what I was trying to say, that D will be the right answer if we are talking about only the demand, right? That within 3 months, the date which is mentioned on the check, what is that? That within 3 months, this particular date is valid, otherwise it is not valid. The check is not valid after that. Okay, fine. Now this question, which of the following statements about pledge, hypothecation and mortgage is correct? Pledge, hypothecation, mortgage. So pledge, always remember, we have the examples in our mind: gold loan, hypothecation, car loan, mortgage, we have the home loan. Like that, you should be able to answer the question very easily. Pledge, hypothecation. Yes, so what is the right answer? In mortgage, the possession of the security always remains with the lender. No, always it won't remain with the lender. And when we talk about the English mortgage only, that is the only one where the possession will be there. Fine, you will be transferring to the lender, and then lender will be again transferring once the loan is over. So this is wrong. A car loan is an example of pledge because the security is movable. Although in car loan, the security is movable, but it is the example of hypothecation, not pledge. So this is also wrong. In a pledge, the borrower retains the possession of the movable security. Yes, the borrower will be retaining the possession of the movable security or not. No, in the gold loan, we have seen that the possession lies with the bank. This is also wrong. Hypothecation involves movable asset as security. Yes, with possession remaining with the borrower. D is the right answer. Okay, so this table we have seen in the mini marathon also, that the possession remains with whom and what are the examples and what are the types of security. From here, they will ask you questions again and again. So pledge, always remember, movable as a type of security. Then hypothecation, we are talking again about the movable security. Immovable security, mortgage. Possession of the security remains with the lender in case of pledge. It remains with the borrower in case of hypothecation. And for the mortgage, it usually remains with the borrower. Only in case of English mortgage, which is not applicable in our country, you will find that it remains with the lender, otherwise with the borrower only. Examples, we have gold loan for pledge, car or vehicle loan for hypothecation, and also in the KCC, we have the hypothecation of crops also, right? So that can also be taken under the hypothecation head. Mortgage, housing loans. fine, housing loans. Then we have Bailey-Wheeler relationship. When we talk about the important relationships, here what you have to remember is the lessor-lessee. Lessor-lessee relationship is important for our examination this time because it has been in news for the past 5 or 6 months. So what is a particular individual or a customer treated as in the case of lessee-lessor relationship? So the customer is treated as lessee and the bank is the lessor or the owner of that premise where the safe deposits are kept. So section 105 of the Transfer of Property Act, it deals with lessee, lessor and your lease. The banks provide safe deposit lockers to the customers for the use of sale, fine, use on the sale basis. So the customers are what? They are only having a right to use the premises or for that matter specifically these particular lockers. The relationship here is that of lessor-lessee or for that matter licensor and licensee. When we talk about liability of the bank, from here they have asked good number of questions. So liability, always remember, the bank is not liable for any damage or to the contents of the locker when the damage is arising from natural calamity, act of God like earthquake, floods, lightning, thunderstorm, or any act that is attributable to the sole fault of the customer. If the customer is determined to be at fault, then also your bank has no liability. But when we talk about the bank's liability, when it arises, all these things, we have fire, theft, burglary, robbery, dacoity, building collapse is there, or due to its own shortcomings, negligence, or for that matter, some employee is involved, then we will say that yes, bank is liable. And the liability will be of the form of penalty. Fine, penalty will be levied on the bank. And what is the penalty? It will be equivalent to the 100 times of the prevailing annual rent. So whatever annual rent you are charging to a customer, multiply it by 100 and that will be the penalty levied on the bank. Okay, if the liability of the bank is established. Okay, now let's talk about money laundering cycle. One important type of operation we are talking about, money laundering. Yes, like a security you can call it. 100 times the rent. Good. So according to the money laundering cycle, which stage is characterized by making the illicit funds difficult to trace by moving them through a series of transactions, such as transfer to an offshore bank. So first of all, whenever you see the money laundering cycle, what should be in your mind? PLI, placement, layering and integration. Fine. These are the 3 steps under your money laundering cycle. So we are talking about placement, integration, layering or collection. Whenever we say that the stage is characterized by making the illicit funds difficult to trace, we are talking about the untraceability of these funds. So what will be the right answer? Everybody. Yes, correct answer is option C, layering. N number of transactions, series of transactions we are doing so that it becomes difficult to trace the funds. So it all starts with the collection of the dirty money, and then we will try to place this dirty money which you have accumulated via various illegal activities. We will be trying to place it into the financial system. How? By N number of transactions, series of transactions, which is under your layering stage. So once the layering is over, you will find that the funds are being available, or for that matter, they have been included in the entire financial system. Fine. The financial system now includes these illicit funds also. After that, the integration will be there. How you will be integrating these funds? Just by buying some big assets, some, you can say, expensive assets, expensive items, so that you won't be questioned by anybody that where are you holding these illicit funds. So you will be buying the houses, buying the industries, buying a plane, like that. Yes, layering. Good. Now, which statements are incorrect in terms of your saving bank account? Saving bank account, incorrect statement. So we are talking about the simplest of all. Fine. Saving bank is more simple will be your BSBDA, that also will be looking into. So savings bank account, they are meant for individuals operating singly or jointly with other individuals. Yes. Sometimes such accounts are opened in the name of institutions which are specifically approved by RBI for maintaining the saving bank account with the banks. So in your module A, na, you will find that the statements are lengthy, but they are easy to decipher. Fine, you can easily eliminate them. Savings bank accounts are opened either with the check facility or without the check facility. Cash withdrawals from the saving accounts without the check facility are allowed through withdrawal slips as accompanied with the passbook. Accompanied with the passbook. Yes, so what will be the right answer here? In this saving bank, whether any is incorrect, any statement is incorrect here. All of you, it is what? Every statement, any statement is incorrect or not? No, D is the right answer. All are true. Meant for individuals, singly, jointly. Sometimes such accounts open in the name of institutions also approved by RBI. Then they are opened either with the check facility or without check facility. And when we talk about your cash withdrawals, they from the saving account without check facility are allowed through withdrawal slips. So simple question, D is the right answer. Then in which case the account can be closed. So closure of account also, they ask some questions. So let's just see that what exactly happens during the account closure. Saving bank account may be closed on written request of the single or all the joint account holders. All the unused check leaves must be surrendered and the passbook should be presented. Fine. Passbook may be returned after updating and marking the account closed in all the pages. Normally we do it like this, account close on the front page. For the balance in the account, a check or withdrawal form must be obtained for your effecting the payment, Okay. The second statement, I think it was institutions, right? So there are certain institutions, certain trusts which are allowed by the RBI. You can open the saving bank account for those also. Right? I think that was the second statement. For this account closure, all of the above will be the right answer, right? Singly or jointly, whatever is there, you have to give a written request and we will initiate the process. All the unused check leaves must be surrendered. The passbook, you have to return. You can return it after updating, but marking account close on all the pages. And for the balance in the account, a check or withdrawal form must be obtained for effecting the payment. D is the right answer. Good everybody. Then comes your BSBDA. Fine. Basic Saving Bank Deposit Account. The deposit of the cash at the bank branch as well as ATMs or CDMs. You have to tell me the incorrect statements. So deposit of the cash is available at the bank branch or for that matter ATMs or CDMs. Then receipt or the credit of your money through any electronic channel, deposit, collection of checks, including your checks drawn by central or the state government agencies and the departments. So whether we can directly receive the money via the electronic channels also or only via the cash itself, the funds will be transferred. No limit on the number and the value of deposits that can be made in a month. There is no limit whatsoever for your BSBDA. Or minimum of 4 withdrawals in a month, including ATM withdrawals at own or other ATMs. Fine, other bank ATMs also you can do. Credit card is also issued. Which of the following is incorrect? Fine, credit card, can we issue credit card for BSBDA? Yes, Riya, they can be SHGs also. Fine, that is also one of the example where SHGs open the saving bank. Fine, they maintain the corpus and based on this corpus only they will be applying for the loan in future. That can also be done. Yes. So credit card, no, you cannot issue the credit card. D is the right answer. BSBDA. Basic Savings Bank Deposit Account. So what all you have to remember? First of all, no minimum balance, very, very important. What is the ultimate agenda? Agenda is for the financial inclusion purposes. Deposit of the cash at the bank branch as well as ATMs and CDMs, you can do that. Receipt or credit of the money through any electronic channel, that can be done. Collection of checks also. Then no limit is there on the number and the value of deposits that can be made in a month. Very, very important. Normally we feel that yes, there is a limit, but no. Normally there is no limit as such prescribed in the characteristics of BSBDA. Minimum of 4 withdrawals in a month, including ATM withdrawal at own or other ATMs. Now, this question is this statement is important for the overall 2025 guidelines, where they have changed some parameters. Right? They have increased the you can say fee for the ATM transaction. We'll be looking into that also. ATM card or ATM cum debit card can be issued. Holders of such account will not be eligible for opening any other saving bank account in that particular bank. Plus, any other saving bank account in that bank should be closed within 30 days from the date of opening your BSBDA. This is very, very important. So, supposingly you already hold one basic, you can say normal saving bank account, and now you want to open BSBDA. So, this account should be closed within the 30 days of opening your BSBDA. Right? Yes, Mayuri, good. So the fee has been increased from 21 to 23. Good. Then Government of India has authorized the dash to act as and to perform the functions of CKYCR. Government of India has authorized which agency here? Whether it is CERSAI, CIBIL, UIDAI or RBI. Fine. So for your SURFACI, for your CERSAI, for your IBC 2016, all these we will be doing in our paid class tomorrow morning, and along with that in your revision, the Maha revision on YouTube tomorrow evening 6 p.m. Right? So what is the right answer here? We are talking about CERSAI, right? A is correct. Good everybody. A is the right answer. So simply you have to remember some important aspects of CKYCR, Central KYC Records Registry. See, these time limits are important. One is your 1st Jan 2017, another is your April 1, 2021. Right? Both the dates are very, very important. So banks are required to upload regularly on your registry, that is CKYCR, all those KYC data which pertains to the individual accounts, fine, for the individual accounts on or after the 1st Jan 2017. For the individual accounts, it is 2017, the time limit. Banks are also required to upload KYC records pertaining to the accounts of legal entities. There are certain legal entities and which are opened on or after 1st April 2021. For them also, the data must be uploaded on regular basis in your CKYCR. But what about those accounts which were opened before these dates? Fine. So whenever those accounts require the KYC updation, once the date arises of the KYC updation, then on that date you will be uploading the data after updating the KYC, uploading the data on the registry also, right? The KYC information should be uploaded within 10 days of the commencement of your account-based relationship with the customer. Fine, account-based relationship has started. Within 10 days, you have to give the ultimate uploading of the data to the CKYCR. Fine, it must be uploaded within 10 days. Very important point. Bank should also communicate the KYC identifier to the customer via mail. Normally, we see that the bank will be giving us the email, and there the CKYC, you can say KYC identifier number is mentioned. If for the establishing the account-based relationship, a customer submits this KYC identifier to the bank with explicitly consent to download records from CKYCR. So you can, as a customer, use this KYC identifier. Bank has no right to use this without your consent. And that is also important. Okay, now let's move on to the partnership, right? Morning we have 6:30. Tomorrow morning 6:30 is the class timing. Fine. So we will be revising there all the legal terms. Fine, legal terms and some questions based on the miscellaneous module A, B, C, D topics. Fine. So mostly we have done in the Power Pack revision all the important topics, but some legal terms will be revising tomorrow. Right? So what is the right answer here? A, B, C are the partners in a firm. B decides to retire from the partnership. What is the primary effect on B's liability for the acts done by the firm before the date of retirement? Yes, everybody, partnership firm, the types of organizations we are talking about. Partnership. So when we talk about partnership firm, mostly they ask from the normal firm. LLP also they ask, but most of the questions are from here only. Okay, so we have C. Many students are answering C as the right answer. What about others? See, everybody must reply, because these questions are those which have either been asked earlier in the examination or chances are there that they will be asked. So if you practice them now and here itself, it will be very much beneficial for your confidence level also while sitting in the actual exam. So let's see what is mentioned here. ABC are the partners in a firm. Now B decides to retire. Right? B is retiring now, saying that I want to be a part of your partnership firm. What will be the primary effect on the B's liability for the acts done by him, by the firm before the date of retirement? Before the date of retirement, what all liability is there for the B's action? Fine. So B's liability for the past acts is automatically discharged upon retirement. No, liability will remain. B remains liable for all the past acts until a public notice of retirement is given. Nobody is asking a public notice, right, for the partnership firm. B is liable for the past acts unless expressly released by an agreement with the remaining partners and the firm's creditors. So the remaining partners and the firm's creditors, their agreement, their particular, you can say, document will be required so that B won't be having any liability in the future, right? So the document released by an agreement with the remaining partners and the firm creditors is the right answer. Okay, C is the correct answer. Good. Everyone is with C. That is good to know. So I hope that we are able to understand that how the ultimate liability arises. Fine. So when we talk about the liability, one is your continuing liability. Retirement from the partnership, like your death, does not automatically absolve a partner of the liabilities incurred while they were a member of the firm. Fine. Automatically, no. A retiring partner remains liable to the third parties because creditors are involved there for the debts and the obligations incurred by the firm before the date of your retirement. That is the reason why we say that take the letter from the creditors also. So in order to discharge from its continuing liability from the past acts, the retiring partner must enter into a novation, which is a new contract via the agreement. We will be having one legally enforceable agreement, which is known as your contract, or an express agreement also will work. But normally we say that yes, you do the contract in order to safeguard the interests of your firm for future. This agreement must be made between the retiring partner, the continuing partner, and the creditor. So these parties are involved. So they can ask the parties also. Okay, fine. Now the uniform rules for your demand guarantees URDG 758 published by the International Chamber of Commerce ICC apply primarily to which instrument? Simple, URDG, whether it is bill of exchange, documentary collections, standby LC, or demand guarantees. What is the right answer? Yes, you can prepare that deed also. Yes, that is also a provision which some firms they apply. So URDG, very simple, 0.5 marker question. We are talking about what? URDG, the publication number 758. This is the publication number, na? Publication number. And under this publication number, what we are talking about? We are talking about the demand guarantees. D is the right answer. Correct? D is right. Okay, everybody. Yes, yes, D is the correct answer. Good. So when we talk about the International Chamber of Commerce, ICC, it has some standardized practices in trade finance. When in trade finance, you will find some rules, some guidelines, and one such guideline is your URDG. So uniform rules for demand guarantee, publication number 758. Do remember, this is the publication number. Fine. These rules provide clear, balanced, comprehensive set of terms, definitions for your demand guarantees, and these demand guarantees are independent undertakings issued by the banks or some other financial institutions to pay specified sum of money upon presentation of the written demand. Fine, whatever the specific amount of money is to be paid, the bank, mostly the bank and some financial institutions will be paying on producing this URDG 758. Earlier, the version was 458, but the current version was adopted, that is 758 was adopted in 2007, became effective in 2010. Apart from this, the ICC has also given us the ultimate rule book, or for that matter, regulations for the LC, letter of credit. So UCPDC, here you will find that it applies to the LC, while your URDG applies to the demand guarantees. Fine, UCPDC applied for LC. Do remember this. We'll be solving one question also based on the LCs. No. All the creditors, because when the creditors gave the money to the partnership firm, this partner was also part of the partnership firm. Fine. So all the creditors. Okay, a 16-year-old student being a minor signs a contract to purchase non-essential luxury sports bicycle on credit. What is the status of this contract under the Indian contract law? Many a times they have asked this question for the minor. What is the right answer? Contract is voidable as the student may avoid the contract upon attaining majority. The reason is important. Everybody knows it will be void. But what is the reason? The contract is valid if the guardian of the minor ratifies the agreement, that yes, now let's include the guardian and it will become valid. Contract is void ab initio, from the very beginning, how you have signed this contract. Okay, the contract is valid, but the minor cannot be sued for non-performance. What is the right answer? Yeah, simple. Correct answer is option C. Void ab initio, from the very beginning. Okay, so who all is competent here? Section 11 talks about your person who is competent enough to enter into the contract. Section 11 of Indian Contract Act. So you should be the age of majority, fine, not a minor, of sound mind, and not disqualified from contracts by any kind of law. See, status of minors agreement. Everybody knows that it will be void, but they can ask you specifically based on the case as well. Fine. So this case is very, very important in interpreting the status of minor, that is Mohori Bibi and Dharmodas Ghosh. Yes, Mohori Bibi versus Dharmodas Ghosh. One case was there in 1903. Established the key legal principle. An agreement entered by a minor is absolutely void and inoperative from the very beginning. And this ab initio is what? This is a Latin term which means from the very beginning. Okay. So this case also they can ask. Mohiri Bibi versus Dharmodas Ghosh 1903 pertains to which of the following matters in the Indian Contract Act? So the right answer would be minors agreement. Okay. Now, next question. Mr. Sharma holds FD, fixed deposit of rupees 10 lakh with the bank, earning an interest rate of 7% per annum. He approaches the bank for a loan against the security of this FD. What is the maximum amount the bank is typically permitted to lend to FD's principal amount? Typically, whether it will be the entire amount, 10 lakh, some type of percentage like 90%, 70% or 80%. Typically, what is the scenario? Because it varies from bank to bank, their own policies. But what is the normal scenario under the normal conditions? Which type of percentage we talk about? Yes, normally we say 90%, like 90% of the principal amount. And what is the amount here? 10 lakh. So 90% of 10 lakh 9 lakh will be the right answer. Yes, B is the correct answer. Generally, it is 90% only. And when we talk about the lending limit, the banks typically maintain a margin when lending against the security of the fixed deposit. And they can lend up to 90%, remaining 10% acts as the safety margin. This is the norm across the banking industry. So FD amount, supposedly it is 10 lakh. So maximum loan you can avail on this FD will be 9 lakh. The remaining 1 lakh will be the safety margin. Do remember this. Yes, good. 9 lakh. Then which statement accurately describes the bill of lading in international trade? Such small questions related to your trade, finance, international trade, they will be asking you. So bill of lading is what? Normally we say na B/L, but what is this B/L? It is only an acknowledgement of the receipt of your goods, not the document of title. It is always issued as a single original copy. Only a single original copy is there. No kind of second copy is made. A charter party bill of lading is usually acceptable under the LC unless explicitly prohibited. Fine, it is acceptable unless explicitly prohibited. Generally, what we say that your bill of lading is permissible, but with some terms and conditions. It represents the goods and entitles the lawful holder to the possession. So what will be the right answer here? We are talking about charter party bill of lading, usually acceptable under LC unless explicitly prohibited. See, this is the keyword, na? Accurately describes. Yes, what is the right answer? Bill of lading is simply telling you that who is the possessor, who is actually having the possession of the goods which are to be considered in this international trade, right? Okay. So the right answer is your option D. That is, it represents the goods and entitles the lawful holder to the possession. Simple. That is the primary aim of this particular bill of lading. Bill of lading is a document of title to the goods, meaning legal holder has the right to the goods. Fine. Okay. When we talk about your charter party bill of lading, it is generally not acceptable under the LC unless specifically permitted. Fine. Okay. So always remember, bill of lading is what? Simply, it is a document of title to the goods. Who is the possessor? Who is having the possession? Who has the right to these goods? Simple. And that is why I have kept this question, because normally we feel that bill of lading they won't be asking, but they can ask some minor concepts as well. Okay, so mark this very important. Then RBI grants your AD category 1, 2, 3 status. Fine. So authorized dealer category 2 licenses primarily to allow certain entities to execute which type of financial transactions. So AD category, we are talking about which type of transactions, financial transactions, whether it will be for the export related, trade related, or for that matter investments in the foreign countries, capital account, or non-trade current account transactions. What will be the right answer? AD2. Fine. Normally AD2 we see for what? For medical treatments, right? Whenever there is a funding, or for that matter transfer of funds for the medical treatments, we say what? That yes, we require the authorized dealer category 2 to provide the heads up, right? So it is what? The medical treatments, they are of which nature? Are they of trading nature? No, they are non-trade. Whether they are for long term? No. Medical treatment you require quickly. That is for what? Current account transactions. So what is the right answer? Trade related exports, imports? No. Major capital account? No. A defined range of non-trade current account transactions. C is the right answer. Okay. So yes, good. C is the correct one. Excellent job, guys. C is the right one. So when we talk about the AD category 2 license, specifically authorizes entities to handle a limited range of non-trade current account transactions such as remittances for training, medical treatment, and your visa fee as well. Okay. Now let's just try another question based on the partnership firm. Fine. Favorite topic of IIBF. So what will be the right answer here? If any account holder having more than one FD, can he apply for loan? No, not some. Individual FD will be having individual lien. Some security margin will be kept, and based on those individual FDs only, we will be providing the loan. And you cannot say that club all these FDs, because every FD is having different dates. Fine, different date of maturity. What is the right answer here? Let's see. MQR, they are the partners in partnership firm. They applied for working capital loan at your branch, which was subsequently sanctioned by the sanctioning authority. Mr. P came to you to execute the mortgage of the property on which their firm is established. Which section of the Indian Partnership Act 1932 will govern this matter, and will you allow him to execute the mortgage? Whether you will be allowing them to execute the mortgage or not. Yes, everybody. Based on partnership firm. Fine. Based on partnership firm itself. So we are talking about the partners, right? Which section? Which section? It asks the section number also. So applied for working capital loan at your branch, which was subsequently sanctioned by the sanctioning authority. P came to you to execute mortgage of the property on which the firm is established. Which section of the Partnership Act will govern this matter? Section 19, right? And when we talk about the allowing of a particular partner to execute the mortgage, whether you will be allowing them, no, we need every partner, right? So what is the right answer here? Correct answer is option D. Section 19 of the Indian Partnership Act 1932, and no is your answer to P, Mr. P. Okay, alone, single-handedly, no. All the partners are required here. Yes. Okay, section 19. See, there are two sections, 19 and 20. Do not get confused. Whenever we talk about section 19, it is implied authority of a partner. Right? A partner has no implied authority to transfer immovable property belonging to the firm by mortgage or sale. Single-handedly, you cannot do that. Mentioned in section 19. Fine. And what is section 20 then? Section 20 simply gives you an authority, gives the partner an authority, the partners an authority to modify something which you have done under the section 19, right? Under the section 19. So 19 and 20 are related. Section 20 allows the partners to modify the authority mentioned in section 19. Okay. So here also section 20 applies only if the partners have already agreed to give one partner some extra authority, but it was not mentioned in this question. If they have mentioned that yes, your Q and R have provided the unlimited power, unlimited authority to P to do whatever he wants to do or she wants to do related to the mortgage of the property, then definitely section 20. But here no such thing was mentioned. We are only talking about the implied authority of a partner, section 19. Okay. So Mr. P alone cannot mortgage the firm's property without the authorization. Fine. Yes, D is the right answer. Now, rule of Clayton. Fine. Try to answer this question. A very interesting question. Fine. Rule of Clayton's based on FIFO. Right. If you remember FIFO, FIFO. Try to answer. Based on your rule of Clayton's, they have asked good number of questions. Fine. Yes, yes. Rule of Clayton. So we are talking about what? Chronology order, with what we have seen in the classes. Rule of Clayton. C for Clayton, C for chronology. Fine. So one case is mentioned here that Mr. Kumar has an account with ABC Bank. At the start of April, his overdraft balance, the OD balance, was 30,000 in debit. During April, he made the following transactions. Let's see what all transactions were made. 3rd April, deposit of 10,000. 10th April, withdrawal of 5,000. 15 April, deposit of 8,000. And 20 April, withdrawal of 6,000. Fine. So all these are what? These are the transactions done during the month of April when the starting overdraft balance was 30,000 of debit. When debit is there. Okay. Fine. So till now, nobody has answered the question. I feel that you must be having some problem in this particular question. Try to ask. Fine. Try to ask whatever issues you are facing. Using the rule of Clayton's, what will be the overdraft balance on 21st April and which transaction is set off first by the deposits as per the bank's balance sheet? What will be the right answer? Bank's balance sheet. The first one will be which type of transaction? What will be the overdraft balance on 21st April? That is after the withdrawal of 6,000. Fine. And which transaction is set off first? Which transaction? Whether it will be April 3rd, April 10th, 15th or 20th. So definitely April 3rd based on FIFO, first in, first out. And what will be the amount here? Everyone. Okay, so we have maximum students with A. Good, good. Yes, yes. A will be the correct answer. 23,000 and the deposit on 3rd April sets off the opening balance. Section 19 states that if you have Section 19 simply states that you cannot single-handedly go and mortgage any property in the partnership firm. Fine. Single partner has no right until and unless explicit right is given by the other partners. Fine. You say to your two partners in a firm that yes, I want to have a single-handed right over the properties of whatever are there in our partnership firm. Give me that right. And your partners happily give it to you under Section 19. But Section 20 talks about what? Any modification of your Section 19 deeds. Fine. You have done what? Given the partner single hand, upper hand for the mortgage related cases, but now you want to modify it that yes, no, we don't want him or her to be the sole decider of what we should do of the properties. Then the modification will be under Section 20 if required. Okay, fine. So these are the difference. Yes, yes, I'll be explaining this question. Don't worry. Correct answer is your option A, 23,000. The deposit on 3rd April sets off the opening balance. So what does this rule of Clayton states? Let's just start from here. So simply it states that for a single account, each credit, the deposit, is used to sequentially set off the earliest unmatched debit, the withdrawal or for that matter OD, in a chronological order. This is important. Whenever we talk about the deposit or for that matter withdrawal, it must be made in the chronological order itself. Otherwise, this rule of Clayton won't hold true. So step by step explanation, let's see one by one. So opening OD on the 1st April was what? 30,000 in debit. Now deposit 10,000 here. You have deposited. So this was what? Debit means minus. So deposit means addition. So minus 30 plus 20 makes it what? Your oldest debit will be 20,000. Fine. Minus 30 plus 10. What is the number? Debit of 20,000. Now, 10th of April, you withdraw 5,000. Fine. Withdraw 5,000. So, in this minus 20, you are again doing what? Minus 5,000. So, it will be overdraft will increase to what? 25,000. Minus of 25,000. Then comes deposit of 8,000 on 15th of April. Right. So it will set off the oldest remaining debit. What is the oldest remaining debit? Your minus of 25,000. Simply add 8,000 here. So 25,000 is in debit. Add your 8,000 here. What will be the ultimate calculation, you will be having 17,000 with the negative sign. The debit still holds, OD still holds the debit sign. Now, lastly, you are doing what? April 20th, you are withdrawing 6,000. So again, withdrawal is there. So minus 6,000. What will be the answer here? 23,000, and that too in the debit. Fine, minus 23,000. So the chronology you must follow. Fine, first in, first out. And the ultimate agenda, the question which was asked was that which transaction is set off first. So the first transaction will be 3rd of April, the first transaction itself in the month of April, and the ultimate you can say value, or for that matter the ultimate fund of your overdraft account now after the 20th April stands at 23,000, fine, of the debit. Okay, fine. So after all the postings, OD on the 21st April, the next day stands at 23,000, and we have the data till your 20th April only. After that, whatever happens, it is none of our concern, fine, whether they are depositing or for that matter withdrawing. Okay, fine. So in a running account, the first payment which you have made is applied to the discharge for the first debit entry, and this is known as your first in, first out method also. So rule of Clayton, simply known as your FIFO, where the first entry will be settled with the first debit whatever has been made, the unmatched debit we are talking about. Okay, attorney related to rule of Clayton. Fine, this question is okay. I think everybody understood the rule of Clayton, how it will be calculated, the calculation. Fine. Calculation part is very, very important. Otherwise, though, it is simple. First in, first out. If they ask the theoretical question, we can answer first in, first out. But what about the calculation? That's where the problem lies. Okay, fine. Next question. Projected value is given of the raw material consumption as 4,800 lakh. We also have the value of the raw material to be bought on credit 3,000 lakh. Time for the advising LC 6 days. Shipment time 8 days for the time for advising LC. Shipment time is 15 days. Credit period available for the calculation of maximum permissible bank finance 22 days. So you have to calculate 3 small questions based on the data. Time required for one cycle, number of cycle, and LC limit per rotation per cycle. What is the right answer? Time required. First of all, time required. Let's just try to answer that. So what all components we have to calculate for the time required? Everybody. How we should proceed with the time required? Simply adding, fine. Simply adding the number of days which are given. So advising LC 8 days. So just add it with the shipment time. And lastly, the credit period. So 22 plus 8 is 30. 30 plus 15, 45. A is the right answer. Simple. Then number of cycles per rotation possible in a year. Suppose it, and you are given here that you have to assume 360 days in a year. Even if it is not given that 360 days should be there, you must always assume 360 days for the sake of simplifying your calculations. Fine. So number of cycles, how you will be calculating? So we have what? The overall number of days 360, and the time required for one cycle we have just now calculated as 45. So simply divide it, 360 divided by 45. What will be the right answer? Everyone, C is the right answer. D, 8. Sorry, C is the right answer. That is 8. Then LC limit per rotation per cycle. It will be what? LC per rotation per cycle. So we have here some values already given to us. Value of your raw material to be bought on credit, it is 3 lakh. And how many such cycles are there? Fine. 3 lakh will be the value. But for how many cycles? Per cycle they have asked. There are 8 cycles. So for one cycle you have to calculate. So it will be what? 3,000 lakh divided by the 8 which you have seen here. Fine. So the correct answer stands at what? It will be 3. Then we have 67. It's 375. B is the right answer. B is correct. Okay, everybody. Fine. Fine with everyone. 45 days, 8 cycles. Good. And what about the LC limit? So such question they can ask for either 1 mark or 2 mark. Yes, at least for 1 mark they must ask, or maximum for 2 marks they can ask such questions. Okay, so if such questions are there, I hope you will be able to handle. And all of you who have not attended our numerical class, fine, the numerical class which happened here only on this channel itself, I would highly recommend, after going through this particular lecture of Maha Marathon, go and watch the numerical class. There we have done each and every formula based question, every formula, and whatever was left in that particular class we will be covering here. So you have to watch all these sessions. Ultimately, clubbed together, these sessions will be fruitful for you in the actual exam. Okay, fine. Simple calculation. Very simple. See, sometimes what happens, na, they deliberately give you some additional data. In many questions, in the actual exam also, you will find some data, random data is given to you, which makes no inclusion in the formula also for what they have asked you. Okay. Fine. So do not get worried that why we have not gone through the remaining data. There will be some data which has no role while calculating. So this is the data for confusing you, right? Just to keep you confused during while solving the question. Okay, fine. A term loan of 10 lakh has been outstanding for more than 2 years now, classified as doubtful asset. Calculate the total provision required. So more than 2 years doubtful asset is there. Which category? Doubtful 1, 2 or 3? Quickly tell me. First so tell me this only, 1, 2 or 3. This we have done in our classes also, here also, and they ask 0.5 marker based on this also. So for more than 2 years, which category? D1, 2, 3. It is doubtful, but which category? And then let's just try to answer the total provision which is required. Total provision is also to be calculated. Good everybody. Now let's just move on to the question total provision. How we will be calculating the total provision? We are given with the value of the security 1.5 lakh. Then the loan under the CGTMSC, it has the coverage of 75% of the unsecured portion. And as on 31st March, it has remained doubtful for more than 2 years. So first and foremost, the ultimate outstanding balance, we must know that. So first step will be what? Outstanding balance. Fine. Outstanding balance, which is what? 10 lakh. This is the first step which we must know. That is clear with everyone. Okay. Now what is the security? The security is 1.5 lakh. So simply 10 lakh minus the security 1.5, which will be what? 8.5 lakh. Right? This is what? The 8.5 lakh which we have just now calculated. This is the unsecured amount. So first calculate the unsecured amount, because based on the unsecured and uncovered under the CGTMSC only, we will be calculating the provision. So step 1, calculate the unsecured amount. Right? Okay. And now this unsecured amount, it will be having what? It will be covered under the CGTMSC cover, which is mentioned as 75%. So step 3 will be what? 75% of your 8.5 lakh. Try to calculate this. 75% of 8.5 lakh. So use the calculator. Yes, you can use the calculator also. No issues whatsoever. So it will be roughly what? 75%, 6.4, less than 6.4 definitely. 6.37375. Fine, 375. Okay, you can use the calculator also, but I think roughly it will be this only. Now we have what? The CGTMSC cover value. This is the cover. Now, what is the uncovered portion? Uncovered portion. Fine. So the remaining one will be uncovered. 8.5 is unsecured, and we have the secured, or for that matter covered portion as your 6.37. Fine. So what will be the unsecured as well as uncovered? That we have to calculate, right? And how will be calculating? Simply subtract these two values. So your unsecured as well as uncovered value will be what? Based on which we will be doing the provisioning. So I can have this value as approximately 6.38 also. So let me just write like this only. 8.5 lakh minus 6.38. So this will be what? 2, 1, and this will be 2. Okay, 2.12. This is the value which we have. Now, based on this portion, right? Based on this portion itself, we will be doing what? Calculating that what will be the actual provision norm, right? The actual provision norm. Okay, fine. So the provision for unsecured and uncovered, that is your 2.12 lakh. And when we talk about the total provisioning, it will include one more amount, the provisioning for the secured portion. The secured portion is what? 1.50. That is the provisioning for the, that is the secured portion. And the provisioning stands at what? 40%, right? So what we will be doing? 40% of 1.50. That will also be doing. That is your 40% of 1.50. So calculate this particular number. It will be what? 0.60. 0.60 will be there. 0.60 lakh. So now we have the unsecured and uncovered also. We have the secured one also. And total provision will be what? Adding simply both these. Unsecured, uncovered plus the secured one. So the right answer will be 2.12 plus 0.60. Correct answer stands at 2.72. Okay. So D is the right answer. Yes, everyone, D is the right answer. Yes, 40% will be there for your secured amount. Good. D is the correct answer. So steps are important. First, you will be having the outstanding amount mentioned. Out of that, calculate the unsecured portion. Then calculate the uncovered portion. And after you have calculated unsecured and uncovered, then you will be doing the provisioning for the secured portion. 40% of the security, that is 1.50. Just simply add these two numbers, you will get the total provision. So I hope that if they ask such question in the exam, you will be able to answer. Okay. Here are the steps involved. Outstanding balance is given. Then you have the value of security as 1.5. So unsecured amount will be the first criteria which you have to calculate. It comes out to be 8.50. Subtract the CGTMSC cover. That is your 6.38. Ultimately, why we are subtracting this cover? So that we can get the unsecured and uncovered portion. Unsecured is what? For which we have not taken any security. The bank has not taken any security. Uncovered portion is what? The portion which is not covered under the CGTMSC guarantee. Okay. So this is what we have to actually find, the second. After that, the provision for the secured portion, as we know, 40% will be there. And it will come out to be 40% of your security. That is 40% of 1.50, 0.60. That is your third step which we have to calculate. Simply add 2 and 3, you will get the total provision. Okay. So now I hope that the steps are clear, because ultimate agenda is this only, that after this class, we should not have any kind of questions in our mind related to whatever topics we have studied. Fine. Now let's move on to the next question. ABC garments. Let's try to answer this question, which is based on the bill of collection. Which facility has the secure bank most likely provided to the ABC garments? A case-based question, right? Try to answer this, everybody. Normally, though, when we talk about such question where the goods are being sold and ultimately the bill is payable 30 days after the site, so directly I can answer as bill discounting. But whether it is actually the bill discounting or not, just try to answer the question. No. First, you have to calculate the unsecured one, the unsecured portion and the uncovered one. Right? You have eliminated the security. Na? From 10 lakh, you have eliminated the security. Now comes the unsecured portion from the 1.5 lakh. Fine. Okay, the provisioning will be calculating how the secured portion, it's 40% will be your provisioning norm for the secured amount. What is the right answer here in this question? So ABC Garments Private Limited recently sold the goods worth 5 lakh to XYZ retailers on credit. To ensure quick liquidity, ABC Garments goes to their banking partner, Secure Bank, with a bill of exchange drawn on XYZ retailers. The bill is payable 30 days after sight. ABC Garments request funds from the bank now before the maturity date in order to have their business up and running. The bank pays ABC Garments an amount after deducting some charges and then sends the bill for the collection on due date. What are we talking about? The bill discounting. C is the right answer. Yes? Good everybody. Here C will be the right answer. So when we see the case now, it's not always difficult. Okay, try to understand this thing. So bill purchase, bill discount and advance against the bills for collection. Simply the categories of your bill finance. First of all, what is your bill purchase? Whenever the bank negotiates the bills payable on demand, whether you are documentary or for that matter clean, the facility is known as bill purchase, the simple type of your bill finance. The face value of the bill is immediately paid to the holder. Whatever the bill states, the value is directly you will be giving it to the holder of that bill. The bank, after purchasing the bill, becomes the holder now. Now the bank is the holder in due course and acquires all the rights of ownership over the instrument. The bill purchase facility is extended generally in the case of bill payable on demand only. So the simplest form is your bill purchase without even deducting any amount. But maximum you will find that bill discount is what we use in the banking industry or for that matter trade. This facility extended by the banker when the bill of exchange are payable after a particular period, that is the bills payable otherwise on demand. Fine, after a particular period, you have 3 months, 10 months like that. So for that we have the bill discount. We pay some fee to the bank, service charges to the bank. Bank will pay a certain amount like 96% of the bill amount, 95% of the bill amount, like that. Then we have ABC, advances against bills for collection. So you are providing some advance against the bill and ultimately the firm, whosoever is holding the bills, they will be enjoying the amount. So when the bank advances against the bills which are in the course of action, the facility is known as advance against bill for collection, normally known as ABC. Always remember, this is the version of bill finance where we provide advance. Under this facility, prescribed margin is kept by the bank. In the consideration of this allowed to the customer, the bill thereafter is sent for the collection. So some advance will be provided under ABC. Okay, now let's talk about another case based on various bank guarantees. Raj Enterprises is planning to purchase new equipment from Machine Co on a deferred payment basis. Fine, DPG kind of arrangement is there. Machine Co wants assurance that it will receive future payments as agreed. Raj Enterprises approaches their bank to obtain a guarantee for this particular arrangement. So Raj Enterprises is purchasing equipment from Machine Co. Fine, and they will be paying at a later stage. And Machine Co wants what? The Machine Co will want assurance, fine, that it will definitely receive the future payments. Now, for that, Raj Enterprises will approach their bank, obtain the guarantee for this arrangement so that Machine Co is satisfied. The bank evaluates the purchase agreement and issues a specific type of guarantee to Machine Co. And we are talking about which type of guarantee. After reading this line, your mind must signal the exact guarantee. Promising to make payment in case Raj Enterprises default on future installments. Which type of bank guarantee did Raj Enterprises Bank most likely issue for this particular purchase? Which type are we talking about? Yes, everybody? It is a deferred payment guarantee. That is DPG. C is the right answer. Good. Excellent job, guys. Good. Fine. So financial guarantee, normal guarantee. When the customer of the bank is required to deposit some amount with the court, and ultimately in lieu of that money we are providing guarantee. But DPG, no amount is deposited. Performance guarantee, these are meant for performance of the contracts enter into by the customers. That what is the performance of your previous contracts, previous guarantees which we have given to you, or for that matter future projections also can be seen via the financials of a particular company. Such type of guarantee if you are providing, the bank is providing, then we are talking about performance guarantee. What is DPG? This type of guarantee is issued when the bank's customer purchases some machine on the basis of deferred payment. Fine, and this will be done by what? Which type of institution? Bank will be providing, because the customer is theirs only. Then comes, what is the difference between your term loan and DPG? Simply the account of outlay of funds, how the funds are involved in the respective arrangements. In your term loan, the funds are disbursed immediately. Fine, you want loan of 10 lakh, you will get that. But in DPG, the bank is required to make payment only when the purchaser of the machinery defaults. Fine. So like a guarantor, you are paying the sum at a later stage, deferred payment. Fine. Now let's talk about LC. Okay. ABC exporters, India. XYZ importers, USA. So exporters are from India, exporters are in the USA. They agree to a contract for the shipment of specialized electronic parts. XYZ importers is concerned about the payment security. Fine. The LC comes into picture when we have trust deficit between the two parties. So payment security, yes, concerning factor. So they apply for LC from their bank in the USA. Fine. So USA party applying the LC for their case in USA. LC is routed through an advising bank in India. Once goods are shipped, ABC exporter submits shipping and compliance documents to the advising bank, the normal process of LC, which examines the documents and forwards them to the issuing bank in the USA for the final verification, and the payment to the ABC exporters will be done. Which of the following best describes the role of advising bank in the LC as shown in the case study? Fine. So directly also you can answer this question. No need to go through all these particular situations, all these statements which are mentioned, because if you see what is the role of advising bank, that everybody knows, right? If you are short on time in the examination, whether you should read all these, no, I would highly advise that look for the actual question. If you can make sense out of it, directly answer if you are short on time. Fine. Okay, what will be the right answer? Advising bank. We have seen it in the mini marathon also. We have seen it in your this week also, in this particular week only, Monday or Tuesday, I think. So advising bank is doing what? Examining. Simple. Examining and forwarding the documents. Right. To whom? To the exporter, to the Indian party. Right. So what is the right answer here? Issues LC directly to the importer, makes the payment to the exporter directly. No involvement of other parties. This is wrong. Examines and forwards the documents and authenticates the LC to the exporter. B is absolutely right. Correct answer is option B only, right? B is correct. No need to go to C or D. Directly we can answer option B as the right answer. Good. Quickly, let's just revise the cycle. Fine. LC starts with the first step, agreement. Fine. They agree to a contract, the legally enforceable contract, one exporter and one importer. Once the agreement is signed, once the contract is made, you find that the importer will apply for the LC. Always remember, importer starts the process, initiates the process, and on behalf of the importer, this opening or the issuing bank will be issuing the LC in the third step. And what is the role of this advising bank? Advising the exporter. Simple. So they will be the exporter's bank, or the advising bank, or the confirming bank. They will be doing what? Verifying the LC and forwarding it to the exporter. Once the exporter sees and matches it with all those clause, all those T&Cs which they have signed in the contract, they will be shipping the goods. The consignment starts now in the fifth step. After the consignment has started, initiated by the exporter, the documents are being provided by the exporter to the advising bank, who will forward these documents to the issuing bank, and the issuing bank verifies and sends it to the importer, thereby doing what? Ultimately closing the process of LC. These are the 8 steps which are involved. Apart from these steps, we have the types of LCs also, which is very, very important. We'll be looking about those LCs also in this particular class. Okay, so quick revision for all of you. If you want to quickly revise that, what is the role of which type of entity? Simply applicant, we have the importer and the particular activities buy. Beneficiary, your exporter, and the activity is what? Selling the product. Issuing or the opening bank is the importer's bank who issues the LC. Advising bank, exporter's bank who advises the LC. Confirming bank, advising bank or the third party bank itself, fine, and they confirm the LC. Paying bank is also there, any bank as specified in the LC who pays the draft. So these confirming bank and paying bank can also be a party in the special scenarios, fine. Supposingly that the confirmation is not being made by the exporter's bank, then who will make the confirmation? Specific confirming bank, a separate bank will be there. Similarly, paying bank, the particular draft will be paid by one of these banks, but supposingly we have some scenario where a separate bank is involved. That bank will be known as paying bank. Fine. So functions will be more or less same. It's just some additional bank can be there. So mostly you will find two parties and two banks, but these banks can extend up to 4 banks also depending upon the situation. Fine. Yes, payment will be initiated. Payment will be initiated finally. The process of LC is done. Everybody is happy. Payment has been done. Okay. Now let's talk about another case. Shivam Limited, a manufacturing company, manages its operations using the operating cycle approach. The company purchases raw materials with the cash, uses them in production, creates work in progress, converts them into finished goods, sells them often on credit, collects the payment, finally realizes the income also, which restarts the cycle. Now, Shivam Limited wants to improve its cash flow by reducing delays at any stage of this cycle. Any kind of stage, they just don't want to have more delays. Which of the following actions would directly reduce Shivam Limited's overall operating cycle duration? Overall. Find the entire cycle duration we are talking about. Do not just think that yes, one particular action is there, it will reduce temporarily. No, overall operating cycle duration, we need to reduce that. So increasing the volume of finished goods inventory. So finished goods will come when you have more and more raw material, more type of machinery is involved, and there should be demand also. Then only these finished goods will be of utilization. Fine. Lengthening the credit period given to the customers, that will reduce or increase. It will increase. Fine. When you lengthen the credit period, it will ultimately increase the cycle. Speeding up the collection of the receivables from the debtors. Yes, that is the particular agenda via which you can overall reduce the operating cycle duration. D. Procuring the raw materials in large quantities. Although it has the potential of reducing the overall operating cycle in the future date, but effectively whether it will be clubbed by your finished goods inventory, clubbed by the debtors, clubbed by the credit period, that will ultimately make your operating cycle to be reduced via this particular scenario which is mentioned in your option D. The right answer will be yes, option C. This is the direct implication which will ultimately do what? Reduce the overall operating cycle. C is the right answer. Yes. So what is the overall operating cycle of a business? So simply raw material, procurement of raw material. You do it via the cash. You purchase the raw material via the cash, which is the last stage also. Now the production process starts. We have work in progress, and the production process will give you the finished goods. Once the finished goods are sold, the debt collection or the credit payment paid, you will have your final income, the realization of income, and the particular income will be utilized for purchasing again the raw material. That is why we call it a cycle, right? What is coming in is going out, and then again, you can say triggering the ultimate step 1. See, in May 2025, RBI came up with a circular reducing the obligation, the PSL obligation of small and finance banks from 75% to 60%. This 60% we have to remember for our exam. Fine. Anywhere you see that 75% is written, it is a wrong information, whether it is somewhere else or here also. In my classes also, if you are seeing 75%, do not just think that yes, that is correct. No, it is 60%. Okay, fine, 60%. Yes, 60% since May 2025. Okay, fine. Now let's talk about the finance manager. Fine, one finance manager is involved here. So LMN Limited is evaluating its working capital requirement WCR for the upcoming year. In upcoming year, based on its business operations, the following information is available to us. So total operating expense per annum 150 lakhs. Procurement of raw materials, it takes 10 days. And when we talk about the conversion or the process time, 10 days again. Average holding period of finished goods 15 days. Average collection period for 25 days, and assume a year as 360 days. So the finance manager needs to apply for the operating cycle method for accurate estimation of working capital required. Based on the information above, what is the LMN Limited's working capital requirement WCR? So what is the right answer? WCR, we have calculated the cycles, right? So what will be the operating cycles length here? It will involve what all? It starts with your procurement, that is the first step. Then after that we have what? The processing, holding, collection, like that. So process time, collection and holding also. So just simply add these 10 plus 10, 20, 20 plus 40, 60. Right, 20 plus 40, yes, 60 days. This will be what? This will be your length of operating cycle. And when we talk about the number of operating cycles, what is the number of operating cycle? 360 divided by 60, it will give you 6. So this is the number for the operating cycle. Fine, operating cycle. Fine. So what will be the working capital requirement? The total operating expense divided by the number of operating cycles, right? So total is what? 150 divided by 6. Correct answer comes out to be what? Everyone? Yes, D is the right answer. That is 25 lakh. Good. Okay, D is the correct answer. Fine. So procurement plus process plus holding plus collection gives us 60 days. Number of operating cycles 360 by 60. We have 6 as the number of operating cycles, and the total operating expenses 150 lakh, simply divided by 6, 25 lakh will be the WCR. Okay, fine. Yes, now let's just talk about what should be the maximum limit for the LC for each cycle calculated using the given data. So we have Prem Industries is planning its annual raw material purchases and will buy the raw material worth rupees 2400. Fine, 2400. Okay. 2400 lakh on credit out of the total projected requirement of 3600 lakh for the year. Yes, 3600 lakh for the year. For each cycle, the sum of advising the LC shipment and the credit period is 60 days. The company wants to know the correct limit for the LC, assuming 360 days a year. What should be the maximum limit of the LC for each cycle calculated using the given data? When maximum, always remember, maximum limit has been asked. Sometimes they will ask you the specific limit, but here the maximum limit has been asked. After each cycle also they can ask, fine, each cycle. So what will be the right answer here? We are talking about 200 lakh, 300 lakhs, 400 lakh or 600 lakh. Yes. So again, the same thing, we have to calculate what? The total time for one cycle. Then second step, the number of cycles, 360 divided by whatever the total number of cycle is there. And afterwards, the value of raw material, which is mentioned here, fine, which you need to borrow. Fine, on credit, you will be borrowing that. And lastly, what? The LC for each cycle, yes. So correct answer comes out to be what? Everybody? Yes. Okay, C is the right answer as per most of you. Let's see whether C is correct or not. C is the right answer indeed. Good, good. Everybody is answering the same option, and that too quickly. That is good to know. Fine. It means that our preparation is right on track. Okay. So if such questions are asked for the LC, for operating cycle, for XYZ thing, I hope now you guys can handle. So advising LC plus shipment plus credit period gives us 60 days. Number of cycles, 360 divided by 60, 6 will be the number of cycles. After that, the value of raw material, simply 2400 lakh per annum is given. LC limit per rotation, 2400 lakh divided by 6, 400 lakh will be the right answer. Yes, good, good everybody. Yes, yes, correct, 400 lakh. Now, let's talk about the LC more in the form of different types of LCs. We have transferable LC, we have revocable LC, confirmed LC, and the revolving LC as well. So all these 4 types of LCs, what will be the right answer? Types of LC is very important, fine, very, very important. Everyone. Yes, so transferable LC allows the beneficiary to transfer the credit to another supplier in the supply chain. Another supplier. We are talking about one supplier to the another supplier in case of your first statement. Yes, that is what your transferable LC, right? Then we have revocable LC provides security for the seller as it cannot be changed or cancelled without the seller's consent. Whether the seller's consent we are talking about? No, it can be changed. Fine. Revocable LC, we are talking about what? We can directly change or cancel even without the seller's consent. So this is wrong. Confirmed LC provides extra security to the seller as the advising bank also guarantees the payment. Yes, that is correct. The revolving LC can be used multiple shipment for the multiple shipments without the need to issue a new LC each time. The right answer comes out to be your option A, 1, 3 and 4. 1, 3 and 4. Fine. So if you go by the definitions, you won't feel such questions very much difficult. Otherwise, LC based questions are considered to be the most difficult one when we talk about the topic of bill finance and your non-fund based credit facilities. Yes, yes. So statement 1 is correct. Second is incorrect because the revocable LC can be changed or cancelled even without the seller's consent. It does not provide the strong security for the seller. Let's just quickly see the important types with the examples. Commercial LC, also known as your documentary LC, right? Documentary credit, the DC as we call LC or DC. So standard LC used for your international trade. Payment will be made on submission of your shipment and trade document, the normal which we have seen in the previous questions also. So export or import LC, simply the LC name depends upon the user, and the exporter will call it as export LC, and importer, for importer, this will be import LC, right? So just imagine that there is one exporter, Indian exporter. It will be known as export LC for this exporter, Indian exporter. And for the US buyer, it will be termed as the import LC. Then we have your transferable LC. Simply, beneficiaries can transfer all or part of the LC value of to the another supplier. One supplier to another supplier, whether all of the LC value or some part of that value. Just imagine a Dubai buyer is there who issues the LC to the Indian trader. Fine. Dubai buyer issuing the LC to the Indian trader, and this trader now transfers it to the Chinese manufacturer. A chain is there. The transferability is there in LC. Untransferable, simply the beneficiary cannot transfer it to the another party. Revocable LC can be cancelled or amended by the issuing bank without even notifying the beneficiary. Irrevocable, you have to take the consent of all the parties. Then we have your standby LC. It simply works as the payment guarantee if the buyer fails to pay or perform. Fine. If the buyer fails, then standby LC will be there. Supposingly construction firm submits the standby LC. If it fails, if the project fails of your construction firm, the bank will compensate the client. Just like your forfeiting system, right, which we have seen in the I and IFS, or factoring system, international factoring, right? Then we have confirmed LC. Second, or the confirming bank also guarantees the payment, reducing the exporter's risk. So when we talk about standby LC, confirmed LCs, these are special type of LCs which will be doing what? Minimizing the exporter's risk. Unconfirmed LC, only the issuing bank will give the payment assurance, no second bank, no confirmed bank is involved. Then revolving LC, used for regular payments, like one LC covers 6 monthly shipments of 100 tons of coal. That 100 tons will go in 1 month, then next month also, third, fourth, fifth, sixth month also. So one LC for all these transactions, revolving LC for the same type of, you can say, product, or for that matter, goods. Back-to-back LC, beneficiary uses the LC received as security to issue the another LC. You are using the LC which you have received. Now you take it as a security and another LC is issued to the supplier. So Indian trader, just supposingly they receive the LC from the US buyer and issues another LC to the Chinese supplier, directly back to back. Red clause, green clause, very, very important. So red clause, simply it allows the advance payment to the seller. Fine. Seller will receive the advance payment even before the shipment of your production, or for that matter, raw material. So textile exporter will get, let's suppose, 30% advance to start the manufacturing of the goods. Advance amount is given, red clause LC. Green clause, similar to red clause LC, but also covers advance for warehousing or storage. Here in the red clause, advance does not include the warehouse or the storage requirements, but in green clause, you will be having that component also added in the red clause. So exporter gets 30% advance and some extra funds for warehousing goods before shipment. Right, till here everything is okay. Now let's move on to the 0.5 marker. In cash transaction report, CTR, cash transactions above 10 lakhs is to be submitted on monthly cash basis by 15th of the following month. To whom? RBI, CBI, FIU India, or no need to submission of this type of report because threshold is not there. Above 10 lakh, yes, you have to submit. To whom? RBI, CBI, FIU. FIU India will be the right answer. Option C. Fine. So when we talk about the monthly reports obligations, let's just go through them once. Very, very important. When we talk about April months transaction reports, they will be provided by the 15th of May, right? 15th of next month. That is the timeline. First thing first, you must know the timeline. Then comes the reports, the specific reports. Cash transaction reports, CTR, the cash transactions of 10 lakh or more or equivalent, or series of cash transactions aggregating to 10 lakh or equivalent. All these, if the number of transactions or the nature of transactions are like this only, you will be doing what? Generating the CTR and furnishing it to the FIU India, Financial Intelligence Unit India. Then we have cross-border wire transfer report, CBWTR, for all the cross-border wire transfer, whether from India to another country or from another country to India. If the amount is more than 5 lakh or equivalent, CBWTR will be submitted. Then we have NTR, non-profit organization. For this, receipt by the non-profit organization of more than 10 lakh or equivalent, you will be providing the NTR. Then we have your CCR, counterfeit currency report, all the counterfeit notes received. Fine. Wire transfer, like right now, so we say na digital payments. Earlier, we used to say it wire transfer, right? Not digitally, because the digital ecosystem was not that robust. Right? So wire transfer we used to say earlier. The same nomenclature has been maintained till now. Okay. Fine. So these four reports, very, very important. Questions will be asked from here. This table is very important, and we'll be doing another question based on this table. Along with that, some more obligations for these reports. Okay. Consider the following statements regarding the offense of money laundering as per the PMLA, Prevention of Money Laundering Act. So we are talking about all the offenses under PMLA are considered non-bailable. Punishment, maximum punishment for the money laundering offense is always 7 years of rigorous imprisonment. PMLA defines your money laundering and outlines the punishment for the offense. What is the right answer? PMLA, cognizable or non-cognizable? Yes, everybody. Cognizable, non-cognizable, bailable, non-bailable. It is a bailable offense or non-bailable? Non-bailable. Fine. Maximum punishment is always 7 years? No. We have seen that for the narcotics case, or for that matter psychotropic substances, it may extend to 10 years also. The PMLA defines money laundering, outlines the punishment. Yes, the right answer will be what? 1 and 3. 1 and 3 will be the correct answer. Option B. Good everybody. B is the right answer. Yes. So, money laundering offense mentioned where? So, the offense of money laundering defined under your Prevention of Money Laundering Act, and which section? Section 3. These sections are also very important. Section 3, definition of money laundering, fine, money laundering offense. Section 45, it simply states that your PMLA stipulates all the offenses under the PMLA are to be deemed to be cognizable and non-bailable. Fine. Cognizable means you need not to produce the offender in front of the magistrate. Directly you can take him or her in the custody. And also it is a non-bailable offense. Then section 4 of PMLA stipulates punishment for the money laundering offense. And the rigorous imprisonment of not less than 3 years is there, and up to 7 years along with the fine as per the gravity of your offense. In case the particular offense is connected to the Narcotics, Drugs and Psychotropic Substances Act, imprisonment may extend up to maximum of 10 years. Right? And this particular psychotropic substance, can anybody tell me that which psychotropic substance we also consume often? Not the illegal ones, but the legal ones. Right? Anybody who can tell me the name of the legal ones which most of us we consume on daily basis? Fine. Which of the following statements is correct regarding the type of security and the possession in pledge, hypothecation and mortgage? What will be the right answer here? Pledge, hypothecation and mortgage we are talking about. Yes. Coffee, caffeine, tea, right? Yes, tea and coffee. Fine. Okay. So, simple question. This concept we have seen, hypothecation security is usually immovable and possession remains with the lender. Pledge, the security is movable, remains with the lender. Mortgage, security is usually movable, remains with the lender. Pledge, security is immovable, remains with the borrower. The correct answer stands at option B only. Pledge, security is movable, remains with the lender. Fine. Now, according to the international agreements, banks are prohibited from opening or maintaining the accounts for individuals or the entities. In which of the following? Fine. Which of the following? Whether it is your ISIL, the Daesh and your Al-Qaeda sanctions list, 1988 sanctions list, the Taliban list as we call it, or both A and B, or for that matter we have only the entities associated with ISIL. What will be the right answer here? Yes, yes. So for the caffeine also, fine, you can have that particular question. Everybody. So correct answer is both A and B. C is the right answer. Such questions fairly simple, but you must remember the sanctions list. ISIL Daesh and your Al Qaeda sanctions list. 1988 sanctions list is there associated with the Taliban. And when we talk about the measures which are required to be taken, if any match is found from these particular lists, if anything matches, any organization matches the particular list, then we have to advise the Financial Intelligence Unit, India, and the MHA, Ministry of Home Affairs, details of such accounts as per the UAPA notification dated 2nd Feb 2021. So, who you have to inform? FIU India and the MHA. Very, very important. Fine. Okay. Now let's talk about some questions based on your OTP. Fine. OTP based KYC. So KYC, one topic is there. The KYC guidelines are there. eKYC are there. Very, very important. So what is the maximum aggregate balance allowed in all the deposit accounts for a non-face-to-face customer using OTP based eKYC? OTP based eKYC we are talking about. Once the customer enters the branch, enters the bank, fine. After that, what we will be doing? 50,000, 1 lakh, 2 lakh or 5 lakh? Yes, the correct answer is your option B, 1 lakh. Fine, up to 1 lakh. That is very, very important. The maximum aggregate balance. So this is the norm which you should remember. From here, all those important points which are important, let's just see one by one. So KYC norms, we are talking about the CDD procedures, right? The customer due diligence here. When we say that the aggregate balance of all the deposit accounts of the customer shall not exceed 1 lakh, all of them, all the you can say sum of your deposit accounts, it should not exceed, the aggregate balance should be within 1 lakh. Aggregate of all the credits in a financial year, it should not exceed 2 lakh. And what about the borrower accounts, the loan account? Only the term loans shall be sanctioned, first thing first, and the aggregate amount shall not exceed 60,000 in 1 year. Fine. So these are the three limits which you have to remember for the non-face-to-face customer with OTP based eKYC. Fine. Now let's talk about the simplified due diligence requirement for your foreign students opening a bank account. Which of the following is correct? Simplified due diligence requirement. A foreign student can open the NRO account using the student ID of the student ID as a proof of the identity. The bank has 60 days to verify the student's local address after the account is opened. 60 days, or we have some stringent limit to this particular number of days. Foreign remittances to the student's account are not allowed under any circumstances. No remittance whatsoever. The required documents include a passport with a visa endorsement, a photograph, and an admission letter from an Indian educational institution. What is the correct answer? Enhanced due diligence means that we are having some type of inhibitions for some specific accounts. Here, in this particular case, we are only talking about the non-face-to-face. Like earlier, we used to say that only via the eKYC, you can open your account just by sitting at your home. For such accounts, the question was asked. For small accounts, BSBDA, that is a different category altogether. Yes, the right answer is option D. The required documents include your passport, visa endorsement, photograph, and your admission letter from the Indian educational institution. Very, very important. Fine. So they can ask you the questions based on foreign students account, or for that matter SHGs also. So SHGs is simple. The customer due diligence of all the office bearers shall suffice. CDD of not only single but all the group members will be there. What about the foreign students? They want to open the NRO accounts. Fine. So it will be based on what? Passport will be there. Fine. Passport of the student will be taken with your visa and immigration endorsement on it. Bearing the proof of identity and the address also in the home country. The passport contains the address itself. We also have to procure photograph and the letter offering admission from the educational institution in India. Fine. So in India, some educational institution who has given you admission, actually, that letter also is required. Then to obtain the declaration about the local address within 30 days of opening the account and the address verified. Right? So declaration should also be taken for the local address. Where are you staying? You are from, let's suppose, Afghanistan and studying in Mumbai, some university in Mumbai. But where are you staying in Mumbai? For that also within 30 days of opening your account, you have to take the proof. During this period, the foreign remittances do not exceed $1,000 or equivalent, which can be credited, and not to exceed your 50,000. Fine. So very, very important. During this 30 days period, there is a limit. Fine. Limit of credit. So $1,000, that is the cap here, or equivalent can be credited, and the maximum amount which you can receive is 50,000. Prior RBI approval is required to open the account of the students with Pakistani nationality. So only for one case we have the approval required from RBI. Fine. Yes, D is the right answer. Now let's talk about the statement about your limited companies. Consider the following statements about limited companies. A public limited company must have a minimum of 7 members. Private limited company can have unlimited number of members. Subsidiary company of a private company is always considered as a public company. Subsidiary of a private always considered as a public. Do mark this, very, very important. This line is quite confusing. Fine. So what is the right answer? 1 only, 1 and 2, 2 and 3, and 1, 2 and 3. So composition, simple. Yes, the right answer is your option A, 1 only. Why? Because in case of your public limited, you will be having minimum of 7 members. Public limited, minimum of 7, and there is no upper limit. Very, very important. Subsidiary company of another company, that is not a private company. Right? The company which is not a private company, you have a subsidiary of that. And that subsidiary company will be known as what? It will be deemed to be your public company itself, even if registered as a private company. Okay. So subsidiary company of a private company is deemed to be a public company. Then we have your private limited. Here you will find that a minimum of 2 members should be there, and maximum members can be 200. Okay. It also restricts the right to transfer its shares and does not permit invitation to the public to subscribe for any of the securities. Fine. So limited companies, again, very, very important. They can directly ask you the questions from here. The number of members, or for that matter, what about the composition? Okay, so what is the about your LEI, legal entity identifier? So we have seen that the CKYC fine, CKYC registry should be done for the individuals as well as for the legal entities, the LEs. Fine. So there is one LEI also, legal entity identifier. So which of the following statements about your legal entity identifier is correct? It is a 16-digit alphanumeric code used to identify financial transactions. The Global Legal Entity Identifier Foundation, GLEIF, issues LEI codes directly to entities. In India, the Legal Entity Identifier Limited, LEIL, is accredited local operating unit, LOU, for issuing the LEIs, or LEI is primarily used for identifying the individuals involved in financial transactions. What will be the right answer? Okay, so I can see Vijay and Restart both are saying 20 digit. Okay, what about others? LDI. Yes. Okay, I'll be showing the previous question also, don't worry. Just try to answer this one. It is 20 digit. Yes, that is correct. And whether LEIL is there or not. Yes, so we talk about in India, your LEIL is accredited LOU for issuing the LEI. C is the right answer. Good, good. C is correct. So what we have to remember, legal entity identifier, always remember 20 digit alphanumeric code used to uniquely identify the parties to financial transactions worldwide. You have to identify that which particular party is sending funds to which XYZ party abroad. Entities can obtain LEI from any of the LOUs, local operating units, accredited by the Global Legal Entity Identifier Foundation known as GLIF. In India, LEI code may be obtained from your LEIL, which is what? Which is a subsidiary of CCIL, and this subsidiary of CCIL is accredited with GLIF. Okay, so that is why C was the right answer. LEIL and 20 digit alphanumeric code you must remember for your exam under your legal entity identifier. And when we talk about this question, public limited company must have a minimum of 7 members. Yes, maximum unlimited. Private can have unlimited number of members. No, it is restricted to 200. Subsidiary company of private company is always considered as a public company. It is deemed to be a public company, right? Okay, fine. Okay, now let's talk about your gold loan and the DEF funds. In I think 2024, they have clubbed 2 topics and asked them in a single question. Fine, so such questions also we need to practice. So gold loan is an example of pledge. The possession of gold remains with the lender. The bank is required to transfer credit balance to the DEF, your Depositor Education and Awareness Fund, within 3 months after the account becomes inoperative or remains unclaimed for 10 years. What will be the right answer? Yes, everybody should answer. See, such questions are fairly simple if you know both the stories, right? Stories from both the sides. Okay, not an issue, Rajiv, not an issue. So gold loan is the example of pledge, yes, and the possession remains with the lender. The bank is required to transfer credit balance to the DEF within 3 months of the account becoming inoperative or remains unclaimed for 10 years. Within 3 months, or for that matter, after 10 years. What is the right answer? Correct answer is option B, right? Read this statement very carefully, very carefully. That's why I emphasize that everybody must answer this question. Here it is written, bank is required to transfer credit balance to DEF fund within 3 months after the account become inoperative. So account has become inoperative. Now 3 months after this only you will be transferring it to the DEF fund. Whether this is the clause, or for that matter, if your account has remained in the inoperative category for 10 years, then after 3 months of this 10 years have passed, you must transfer the funds to the DEF. Fine, this is correct, this is not. Fine, this is mentioned here. Okay, so B is the right answer. 3 months after the 10 years are completed. Fine. Okay, so the 3 months after account becomes inoperative, no, that is why your second statement is incorrect. Okay, now let's just quickly see Depositor Education and Awareness Fund. What all important pointers are there? So 2014 RBI established this fund, and under which provision? Banking Regulation Act 1949. The banks are required to transfer the credit balance in any account, any deposit in a bank remains unclaimed or inoperative for 10 years or more to this particular fund. Fine, 10 years, not 3 months. This fund is intended to use for the purpose of education and creating awareness as well. Why this is important? Because last year till October, November, your finance minister as well as RBI governor, they were conducting various campaigns for the awareness of deaf funds. Salient aspects: the amount is credited to the fund within 3 months from the expiry of 10 days. 10 years have expired. Now, after the expiry, calculate 3 months. Within those 3 months only, the amount must be credited to the deaf. The fund is utilized for promotion of depositors' interest as specified by RBI from time to time. The depositor is entitled to claim from the bank his or her deposit, and the bank will pay the amount to the depositor or the claimant and claim the refund of such amount. Right? One more question for all of you. What happens if the particular claimant, comes after 15 years? After 15 years, the claimant comes to the bank and says that, yes, I want my funds back. What will happen? Whether the bank will give the funds back, or for that matter, it is gone forever. What will be the right answer? Yes, good everybody. Yes. Okay. Now let's talk about the another question. Consider the following statements regarding banking and legal concepts. According to your money laundering offences, all the offences under your PMLA are non-bailable. Yes, they are non-bailable. Based on the garnish order document, upon receiving an order nisi, a bank should immediately stop all the payments from the affected accounts. Yes, order nisi, the you can say first order, right? The first order in order to recover the money. You are giving what? Via the order nisi, the court is providing an opportunity to be heard. And to whom this opportunity is provided? To the perpetrator who is not giving money, to the party who has lodged a complaint and ultimately case in the court. A car loan is an example of pledge. No, it is for hypothecation. Correct answer is your 1 and 2 only. A is correct. Yes, A is the right answer, everyone. Yes, you can get it back. Yes, return it. Good. Even if it is 15 years, not a concern. Right? A is the right answer for this question. Now, let's talk about the mixed question based on your CTR, or for that matter, other transaction reports. A non-profit organization is required to submit a report if it receives a single receipt of 10 lakh or more. Yes, non-profit organization. Then we have gold loan is the example of pledge where the borrower retains the possession of the security. Gold loan, borrower is retaining, no, lender is retaining. RSETI, your Rural Self-Employment Training Institutes, they are managed by Ministry of Rural Development, or for that matter managed by banks, and the scheme is driven by the ministry. The layering stage of the money laundering involves making illicit funds difficult to trace through a series of complex transactions. What is the right answer here? For a SAT, for your various transaction reports, right? What is the correct answer? We are talking about what? First statement is correct, right? 10 lakh or more. Gold loan, cross, because we are talking about what? Retained by the lender. Then we have Raseti is not managed by a ministry. It comes under the Ministry of Rural Development, but it is managed by a group of banks. Third is also wrong. Layering, you are doing what? In the money laundering stage. Difficult to trace, so series of complex transactions you are making. Fourth is also right. Correct answer stands at B, right? 1 and 4. Yes, good. So I hope that such cases, some questions where the multiple topics are being asked, you will be able to decipher that what is the right answer. Okay, so RSETI is what? Rural Self-Employment Training Institutes. And these are the initiatives of ministry. Yes, no doubt about it. Initiated by the Ministry of Rural Development to provide dedicated infra in each district for your for imparting the training and skill upgradation of rural youth aimed at entrepreneurship development. Simple. Entrepreneurial development of the rural youth must be there, and that is the core aim of your RSETI. But how? They will be doing various programs like agricultural programs, product programs, process programs, journal programs of awareness. Product program specific to a particular product. That is, if you want to invent a new version of the thresher which is used for your harvesting in the fields, then what we should do, what processes are involved there, what are your ideas, like that. Okay. RSATs, they are managed by the banks with active cooperation from the government of India and the state government. So always remember, these are managed by the banks only. When government is not managing, government is providing the cooperation itself. Each RSAT is expected to offer 30 to 40 skill development programs. And what kind of programs? These are the programs which we have just now seen. And what is the normal duration of these programs? They vary from 1 week to 6 weeks of duration. Fine. Now let's just talk about the ANBC. What is the adjusted net bank credit of this particular bank? We have the components with us. Fine. All these components are here. Try to answer this question. This we have done in our numerical class also. In our paid classes also we have seen the formula and the questions. So I want everybody to answer me here. Fine. Try to answer this within 30 seconds. Yes, everybody. ANBC, first step will be what? To calculate the net bank credit, simply subtract these two terms. Then outstanding deposits with the RIDF, you have to add this. For the exemptions, we have to subtract this. Advances against incremental FCNR, NRE deposits, again subtract this. Investments in the government recapitalization bonds also will be subtracting. Lastly, we'll be adding the other investments which are treated as priority sector, and your bonds or debentures in the non-SLR category also will be added. Fine. So what will be the right answer? Now so you have the formula also indirectly. Correct answer will be what? Everyone. Okay, so I have not calculated this, but based on your answers, I can say that B is the right answer. All of you are saying B. Yes, good job everyone. Excellent. B is the right answer. Okay. So the formula is in your mind now, because when we conducted the numerical session, many students were confused that what we should add, what we should subtract. Now, gradually when you practice, this formula will get imprinted in your mind. Okay. So bank credit minus the bills rediscounted, you will get the NBC, net bank credit. Then simply you have to add the RIDF funds, or for that matter the deposits in the other institutions. Then we have to subtract these three. Fine. So simply you can do what? Add these three amount and ultimately subtract it from the actual amount. Then other investments will be added, and the bonds and debentures in the non-SLR category will also be added. We have this particular formula for A and BC calculation. Right, so calculation is also there with you. So once you get the PDF, you can go through this calculation as well. Now we have the Metro Bharat Bank, the domestic commercial bank. What is the total priority sector lending target for the bank? ANBC as 10,400 crore. What is the specific sub target for the advances to your weaker sections? For the weaker sections also, the question is asking you what will be the right answer. Weaker sections. So indirectly what they have asked, the particular priority sector lending guidelines issued by the RBI, right? That is what they are asking. So if you remember the table, a fairly simple question is there in front of us. So how we will be calculating? Simply the total priority sector lending target you have to calculate, and along with that specific target for the weaker section also. A and BC is 10,400 crore, and we are talking about which bank? Domestic commercial bank. So 40% of your 10400 crore, that is the step 1. Once you calculate this, you will get the total priority sector lending obligation. And what about your weaker section? In case of domestic commercial banks, what is the percentage assigned for the weaker section? Anybody who can tell me for the weaker section? 7.5%. Fine. So the correct answer stands at what? Yes, the right answer is option A. 4160 crore total PSL. This when you will be calculating, it will be what? 416. Yes, 4160 crore. And the weaker section, 7.5% of your overall A and BC. 1248 crore. Good. Yes. For weaker sections, I For your weaker sections, it is 12%. Yes, I just mentioned the micro enterprises. For weaker section, it is 12% itself. Okay. So 40% of A and BC, total priority sector lending norm, and 40% of what? Of your A and BC, which is mentioned as 10,400. Out of that, when you multiply these two terms, you will get 4160 crore. And for weaker section, it is 12% of your A and BC, which will be 1,248 crore. Yes, good. 7.5% for the micro enterprises. And what about the weaker sections category in case of one RRB? If here we talk about the RRB, then what will be the target? If the question was pertaining to the RRBs, then what we will be doing? We will be doing for 15%. Okay, rather than 12, we will be writing or calculating using the 15% as the benchmark. Okay, fine. Now let's talk about the table overall, because they can ask from any of these values, right? So total priority sector lending, domestic commercial banks and foreign banks with 20 branches and more. If we have this category, you will find that the total obligation is 40%, right? 40% of ANBC or COB, whichever is higher. For foreign banks with less than 20 branches, that is branches between 1 to 19, 40% is the obligation, but out of this 40, 32% should go to export credit, remaining 8% with the remaining priority sectors. RRBs, it is 75%, and out of this 75%, 15% will go to medium enterprise, social infra and renewable energy, and the remaining 60% to any of the remaining priority sectors. Small finance banks, we have 60% as the obligation. One interesting fact that when we talk about foreign banks with less than 20 branches, you don't have any kind of applicability of the PSL norms for agriculture, for micro enterprise and for your advances to weaker section. But for the remaining three categories, what will be the agriculture limit for the PSL category PSL norms? 18% overall for all the three, and out of this 18%, 14% must go to the NCF category, non-corporate farmers, which include your SHGs also, which includes your JLGs also, and which includes your individual farmers as well. Everything is included here. Same goes for RRBs, same goes for SFBs. Then comes micro enterprises, 7.5, 7.5, 7.5. What about the advances to weaker sections? It is 12% for your first category, domestic commercial banks and foreign banks with more than 20 branches. RRBs, we have 15% as the obligation, and small finance banks is 12%. Anybody who can tell me for the UCBs, out of these, out of your four categories which are mentioned here, domestic commercial banks, foreign banks, RRBs and SFBs, which of these four categories have the similar obligation when we compare it with the UCBs? Similar obligation in case of total priority sector lending, in case of your micro enterprises, and in case of advances to weaker section. These three are exactly replica of which of these four? Anybody who can tell me? It will be for small finance banks, fine, because in UCBs also total priority sector lending target is 60%, micro enterprises is 7.5%, and and weaker section it is 12%. Yes, SFB. So like that also we have to relate. Okay, fine. Now let's talk about the MSMEs. Fine. Let's just have one question here regarding the MSMEs. What will be the right answer? MSME category, turnover, investment, all these things are there. Yes, small finance banks. A textile manufacturing unit has a total investment in the plant and machinery of 18 crore, recorded an annual turnover of 115 crore for the financial year. Based on the current MSME classification guidelines with effect from 1st April 2025, how should this enterprise be categorized? So categorization will be done how? Micro, small, medium or large scale enterprise. So we have the investment as 18 crore and the turnover is your 115 crore. So for your investment, it will be what? Small, fine, small category, because up to 25 crore. And for your 115 crore, the turnover, it will be what? Your medium enterprise, right? So we have learnt that out of the two, whichever is a higher category, we have to select that. Okay. So the right answer will be what? Medium enterprise. C is the right answer. Okay, always remember higher of the two, because 115 it exceeds the 100 crore. Right? 100 crore is for what? For the small, and up to 500 crore will be for the medium, where this lies. Okay, so always remember whichever is a higher category, we will categorize the particular manufacturing unit enterprise in that only. Yes, yes. Okay, so micro, small, medium up to 2.5 crore, 25 crore, and 125 crore we have for the medium. Turnover limits up to 10 crore, up to 100 crore, up to 500 crore for micro, small, and medium enterprise. Yes, yes, good. Fine. So, whether you guys want break or shall we continue? Everybody, any break required? Some breather is required, or it is good that we should continue only? Quickly tell me, because it's 8:30 now. Now we can have a 15 minutes break, then reassemble at 8:45, or for that matter, some other time. Okay, quickly tell me, because right now we are done with one part of this marathon class. So, okay, okay. Ending approximately 10 or 10:30. That will be the time. Ending time. Fine. Then let's have a break of 10 minutes, right? 10 minutes is okay. Most of you are saying that break. So 10 minutes break. Let's have 10 minutes break, and then we will reassemble. Okay. Fine, fine. So 10 minutes break, and we'll reassemble at 8:40, 8:40, or between 8:40, 8:45. Fine. So let's just start the break, and we'll see you guys sharp at 8:40. So welcome back everybody. I hope that the break was sufficient. Now let's continue with our discussion around the remaining topics of your Maha Marathon. Fine. So we have up till now covered the most important topics pertaining to module A and B. Now we'll be moving on to some more topics related to these modules itself. So first question in front of you here, you can see which of the following pairs correctly matches the relationship type with its respective parties, that is bank and customers. Yes, what will be the right answer? Bank and the customers. Yes. So many a times they ask simple questions also, that for pledge or for that matter in case of lease, who will be performing which kind of function, which kind of role is assigned to which of these, right? So for this question, pledge, we have trustee and beneficiary relationship. No. Mortgage, we have mortgagee and mortgager. Yes, that will be the correct answer. For sale purchase, no. Trustee, beneficiary, hypothecation also no. Agent, principal. The correct answer stands at your option B. Okay, so B is the right answer. B option. Correct. Now let's just quickly go through the table from where we are expecting 0.5 marker question. Right. Okay, working properly. So when you talk about the deposit in the banks, in such case, bank will be the debtor, customer will be the creditor, whosoever is providing the money will be the creditor. So here deposit, your customer will be the creditor. In case of loan, you will find that bank will be the creditor and customer will be what? Customer will be the debtor. Okay. So safe custody, we have the bailey-bailer relationship, and the bailey will be who? The particular bank, financial institution which is holding on behalf of the customer some type of safe documents, and the owner, actual owner of that document is your customer only. Then we have locker, lessee-lessor relationship. The particular space is being owned by the bank, and that will be the lessor, and customer who is utilizing some space in the locker, that will be known as lessee. We have collection of check. So on the behalf of a principal, that is the customer, the bank will be acting as an agent in case of your collection of check. For the purchase of a draft, simply who will be the creditor, who will be providing the money? The creditor will be customer and banker is your debtor. Yes. Tomorrow we'll be having one Chalisa also. It will be uploaded in the videos section. Fine. Then we have payee of the draft. Simply trustee is your bank and the beneficiary is your customer. In case of your pledge, so pledgee, that is the bank will be the pledgee, and pledger who pledges some type of gold ornaments, you can say, is your customer. In the case of mortgage, the immovable property is involved and the property is owned by the customer, so the customer is the mortgager and the bank will be the mortgagee. Standing instruction, for some type of check operations we are having SI instructions, so the principal, that is the customer, will be providing the instructions to the agent. On behalf of the customer, the bank will be acting as the agent. Then comes the sale or purchase of the securities on behalf of the customer, again principal and agent. For the money deposited, but instructions are not given for its disposal. So when the money is deposited and the instruction is not given, bank has to act as a trustee in order to provide the best possible solution, a profitable solution for the customer. So bank will be a trustee and customer is a beneficiary. Articles left by mistake, again bank is trustee, customer is the beneficiary. In case of shares given for sale, again agent will be your bank only and as an agent providing services to the customer. Hypothecation, the hypothecator will be your customer who will be you can say the ultimate owner after the particular time period is over, and hypothecatee will be your bank only. Okay, so like that, everything you must remember for the relationship between bank and the customer. Okay. Congratulations, Vikas. That's a good score. Chalisa, basically all the important topics we club together and make one session. Right? Yes, we'll be doing everything. Don't worry. Right now, we have just started. We will be giving you all the important tables. Some tables will be covered today, some tomorrow. So do not feel that anything will be left out. 40 to 50% will be covered today itself, the most important one. And the remaining 40 to 50%, or for that matter, whatever is remaining, that we will be providing in the tomorrow's class. So this class clubbed together with the revision class, the tomorrow's class, 6 p.m. class, you will have every table, every important details, every type of questions which can be asked. Okay. So just consider these two sessions as part 1 and part 2. Fine. So regarding the LLP, evaluate the following statements and select the correct combination. Because for the Chalisa, it will be, I think, the bilingual one. Yes. Okay. Yes. Module B will be doing. We'll be doing some more questions on module B today also. Try to answer this LLP question. LLPs are legally governed by the LLP Act 2008. LLP is permitted to operate with only one designated partner if specified in the agreement. Designated partners are required to obtain DPIN. Yes. LLP agreement is the document that specifies who is the designated partner, who all are the designated partners. Or for that matter, the designated partners, they are only responsible for financial debts of the partnership and nothing else. The designated partner is responsible for all the acts, matters and the things required to be done by the LLP. All the acts, responsibility lines here. Okay. Yes, because we'll see that what happens, because both the channels are there. So we will see that what kind of arrangement is there. But be rest assured, whether the Chalisa is provided on bilingual or on English medium, everything will be included there. Don't worry. Okay. Yes, everybody. The correct answer for this question will be what? For the LLPs, we are talking about option B only. Yes, 1, 3, 4 and 6. So second and 5, they are wrong. Only the designated partners are obligated. No, we have all the partners in case of your financial debt. And when we talk about your LLP, it is permitted to operate only one designated partner. No, that is also wrong. So 2 and 5 are wrong. 1, 3, 4 and 6 will be the right answer. B, yes. Okay. So what we have to remember for our exam, simply LLP, the Limited Liability Partnership, it is formed under the LLP Act of 2008, and LLPs have designated partners, fine, specified in the LLP agreement. At least 2 designated partners must be there, appointed as per your LLP agreement. Designated partners, they have to obtain your DPIN, very important for us. And the designated partners, they are responsible for doing of all the acts, matters, fine, responsible for all the acts, matters and things are required to be done by LLP and as may be specified in it. Okay, so they can ask you the question based on the designated partner, on the DPIN and what is the number of designated partners and what is the obligation. So designated partner responsible for doing all the acts, fine, whatever the acts are there, the designated partner will be responsible for that. Now, which of the following is true for a small limited liability partnership? Simple question, right? You have to tell me the threshold, the value. Contribution not exceeding 25 lakh, turnover not exceeding 40 lakh, right? That is the correct answer. A is the right answer here. Provisional scorecard. Okay. For provisional scorecard, I think it is working now. I have shared one link in the group also, or for that matter, the team has shared one pinned comment in the short video also on the bilingual channel. You can just to copy and paste from that. Right? The pinned comment of the short video for your provisional scorecard. Directly copy that and paste it in the Chrome. You will get the desired link. Yes, you'll be getting the PDF of this particular class in the virtual library. Fine, virtual library. And the link for virtual library, it is pinned in the description box. Yes, A is the right answer. Good. Contribution not to exceed 25 lakh. Turnover does not exceed 40 lakh. We are talking about the small LLPs. Now let's talk about module B again. So a regional bank is reviewing 5 different loan applications to determine the maximum extent of guarantee coverage under the current scheme. Right? Use the provided table to calculate the coverage. Fine. This is the particular table we are talking about. What is the total combined guarantee coverage amount for borrower B and borrower C? So 5 borrowers are there. Simply you have to focus on 2 borrowers, borrower B and borrower C. Okay. Yes, that is the right, that is the interpretation. Yes, total combined guarantee coverage for B and C. So simply you have to calculate these two and add them. Yes, it is not working on the old site. Earlier it was working. Now they have shifted it to some other, I think, link. Some other link has been activated. And once you go through that link, you will be able to access your provisional scorecard. Okay. Fine. If it is still not working, I'll make a separate video. Don't worry. When you guys will get your provisional scorecards PDF, I'll be personally looking into that. Okay. Fine. So MSC located in Ladakh, 25 lakh is the sanctioned amount. And what is the CGT MSC cover in your MSC, which is located in Ladakh? And what about women entrepreneur? Women entrepreneur is very simple, 90% across all the categories, right? Okay. And what about Ladakh? MSCs in Ladakh. So MSCs for the specific amount, they have 75%, fine, 75%. Then for 5 to your 50 lakh, it will be what? Again, 5 to 50 lakh, it is 75% only. But what about Ladakh? In Ladakh region, what is the right answer? Fine, whenever it is mentioned, like here it is mentioned, maximum extent, or whether it is not mentioned also, always go with the maximum value, right? Like in your MSME table, we have seen that if one particular category according to investment, you are in small enterprise category, on the basis of your turnover, you are in the medium category, then always go with the higher one, right? The upper one. Same goes here also. For the CGT MSC, if one category states that the limit is, let's suppose, 75% and another states as 80%, always go with the 80%, the higher one. And it is mentioned here also, maximum extent which you can get. Okay, so 75% or 80% for the MSC which is located in Ladakh, we will be calculating it on the basis of maximum percentage, that is 80%. Fine, when we say that MSC for this particular number, it should be 75%. But it is located in Ladakh where the enterprises have 80% as the limit. So maximum of both will be what? 80%. So 80% of your 25 lakh, just find this. Then we have women entrepreneurs, 80 lakh, simply multiplied by the 90%, which is the extent of guarantee coverage. And then you have to add them. Fine, so 20 lakh, fine. This is what? 20 lakh. And what about this? This will be 72. What is the right answer? A will be the correct answer here, everybody. Yes, 92 will be the right answer. Good. A is the correct answer here, that is 92 lakh. Okay, so I think the confusion is over now, because I was just checking the messages in the break on the group also. Our paid subscribers, they were asking the same question, I think, that which limit we have to choose, whether the 80% or 75%, whenever there is a mismatch between the limits. Right, now there is no confusion, right? So when we talk about the loan amount for the above 5 lakh and up to 50 lakh slab, it has to be what? For your MSc, it is 75%. But as we are talking about Ladakh, in Ladakh, the coverage is 80%. Not only in Ladakh, but in Northeast region and J&K as well. So out of these two, which is higher, 80%. So we will be calculating based on this 80% benchmark. For women entrepreneur across all the categories, it is 90% only. So simply 90% of 80 lakh, your 72 lakh will be the right answer. And the question states that you have to add borrower B and borrower C guarantee coverage. So B plus C will come out to be 20 plus 72, that is 92 lakh. Yes. Yes. Santosh Kumar, we will be covering all the 4 modules. Fine. Some questions will be done today and some questions tomorrow as well. So tomorrow 6 p.m. class and today's this present class, both clubbed together, you will have all the important questions of the entire PPP because it's a vast subject, right? Okay. So when we talk about the ultimate table, the extent of guarantee coverage, which we have to remember, simply your maximum extent depends upon the trading activity. It depends also upon the category where the enterprise is lying. Like we have micro enterprises, for that different guarantee coverage facilities available, the limit of guarantee coverage. MSCs in Northeast, UT of J&K and Ladakh different. Women entrepreneurs different. SC/ST entrepreneurs, PWD categories, all these are different. And when we talk about all other categories of borrowers, it is a separate category itself. Apart from these 4 categories, if the borrower lies in some other category, it will be 75%, right? Okay, women located in Northeast. Women to always be 90%. See what I'm trying to say, that whenever there is a clash, like just imagine we have the clash between SC/ST entrepreneur and the SC/ST entrepreneur is located in Northeast region. Fine. If this is the particular scenario, that one SC/ST entrepreneur is working in the MSc in your Northeast region. So for Northeast region, let's suppose, or for that matter in this case only, the loan limit is 10 lakh. So for the first table, this Northeast table, it would be 80% because 10 lakh lies between here, 5 to 50 lakh. For SC/ST entrepreneur, it will be 85%. So higher of these two will be considering. Fine. Maximum coverage we will be giving to the particular beneficiary. Okay. Fine. Yes, morning class will be there, and morning 6:30 a.m. 6:30 a.m. on the app. The paid class will be there. Fine. One special class will be there for your legal coverage. Fine. We will be taking, earlier we thought that we'll be giving you some recorded video, but now we have decided that we'll be providing you live class itself. Fine. Okay. So when we talk about the coverage for micro enterprises up to 5 lakh, it is 85%. Up above 5 lakh up to 50 lakh, it is 75%. Above 50 lakh up to 10 crore, it is 75%. Fine. When we talk about MSCs located in Northeast region, it is 80% throughout. We have up to 5 lakh, or for that matter up to 50 lakh also 80%. And here, when we talk about 50 lakh to 10 crore, it will be 75%. For women entrepreneurs, it is always 90%. SC/ST entrepreneurs, disability, person with disability, MSCs located in your aspirational districts, ZDD certified MSCs, it will be 85%. All the other categories, it is 75%. Fine. And one more important point is there, that if your MSc is located in the identified credit deficient districts, fine, I, C, D, D. What are these districts? The districts where the credit disbursal is not matching the expectation. So those districts will be deficient in credit. So here, all those SMEs which are located in ICDD, you will be giving them additional 5% over and above the normal threshold. Uh, 6:30 up to 7:30. Zero effect defect. So some MSCs are there which are having what? They are having some environmental obligation also. Fine. And they are backed by the government, that yes, since they are new MSCs, the government will be backing them and giving them some ratings also, gold rating, silver rating, bronze rating, like that. Yes, one example was there which we have done for the 80% SC/ST Northeast, yes. So for the SC/ST Northeast, you will have to go with the 85%. In that question, if we have discussed as 80%, that would be a wrong answer. Fine. The correct one will be 85%, maximum of 2. Because we are talking about what? Maximum extent. Okay. Whatever maximum amount you can give as per the norms. Right. So always remember, select the maximum number. Okay, now let's talk about the SHG self-help group. For the second dose, term loan to an SHG, the drawing par is what? Today's class will be up to, I think, 10:30, something like that. Second dose of your term loan to the SHG. Yes, yes. So earlier, this particular limit of minimum loan limit of the SHG, it was 1 lakh, but now it has been increased to 1.5 lakh. Fine. In dosage, we will be giving the loan to the SHGs. For the first dose, it will be 1.5 lakh. What about the second dose? For the first, it will be 6 times the corpus. Fine. Whatever the corpus is there held by the SHGs, or for that matter, 1.5 lakh, whichever is the higher limit. This is for the first dose. What about the second dose? Anybody? Yes, it will be 8 times of the corpus or 3 lakhs, whichever is higher, right? 8 times the corpus or for that matter 3 lakh, whichever is higher. Okay. So let's just try to, try to complete as soon as possible. Fine. C is the right answer, everybody. Correct? So when we talk about the SHG finance, they can ask you based on these simple criteria. Fine. Even if they ask you a case, you ultimately have to remember these numbers. Okay. For SHGs, we'll be doing one case tomorrow also. But today, let's just focus on the numbers. In case of SHG, what is the sanctioned amount? What can be the sanctioned amount of loan? So simply it varies. You have a corpus, fine. The saving account which the SHG members are depositing some money in that, saving in that particular corpus, and based on this corpus your loan amount will be decided in the ratio 1:1, or for that matter 1:2, or 1:3, or for that matter 1:4 also. Means corpus multiplied by 1, you will get the loan amount. Corpus multiplied by 2, you get the loan amount. Corpus multiplied by 3, that will be your loan amount, or 4 times your corpus can also be your loan amount. That is the normal thing which happens. But what is the exact amount which you will be providing and what type of doses? So minimum loan of 6 lakh should be provided. So whether we should provide this 6 lakh in one go? No, not in one go, in various tranches, in various dosages. Like this 6 lakh we will be providing in 3 doses. Dose 1, that is your DP limit for drawing par limit for the first year. It will be 6 times the existing corpus, this corpus of saving bank account, or a minimum of 1.5 lakh, whichever is higher. Fine. So for first year, 1.5 lakh. Or if your 6 times of the corpus is more, then you can have that limit also. Then DP for second year, 8 times of the corpus, or for that matter, it will be minimum of 3 lakh, whichever is higher. 8 times or 3 lakhs. Then comes the actual number of 6 lakh in the third year. Minimum of 6 lakh based on the microcredit plan. What is this MCP? Microcredit plan is prepared by the SHGs in direct connection with the NGO. So NGOs will be ultimately providing them the inputs that how you should plan your credit and where you should use this particular amount if provided by the bank, and appraised by the federation or the support agencies and the previous credit history. Fine. So 6 lakhs you can have in the third year, not in the first year. That is one thing. Then we have the last year, the fourth year onwards limit. It will be more than 6 lakh. Fine. Normally we see that the limit stands at 10 lakh because here no collateral or margin money is required. But it can go way beyond 10 lakh also. It can be 20 lakh also. Fine. So above 6 lakh based on MCP prepared by the SHG for the fourth year onwards. So it can be a CC limit, cash credit limit can be there. You can make the term loan, avail the term loan also, or the OD, overdraft as well. For the security, collateral free advance is there for up to 10 lakh. No collateral is required. For the SHGs up to 20 lakh, if you are providing the collateral free loan, you can, but here is one catch. What is the catch? That the guarantee will be provided by CGFMU. For the loans to SHGs above 10 lakh up to 20 lakh under this DA NRLM scheme, collateral free loans are available, but under the guarantee. Fine. Your CGFMU, Credit Guarantee Fund for Micro Units, will be providing the guarantee coverage. Then only you can provide the loans beyond 10 lakh up to 20 lakh. And margin, there is no margin. Fine. Which is stipulated for the advances up to 10 lakh. Another reason why SHGs prefer to have the loan limit up to 10 lakh. Okay. 90. If there is CGTM, SC, SC, ST women, we have 90%. Fine. Maximum is in the women category only, that is 90%. Fine. Okay. So now I hope that if they ask question from SHG, your limits, you must be having them in your mind and answering the questions. Okay. Now let's talk about the Tandon method. A company has a total current asset TCA of 10 lakh, and the current liabilities excluding the borrowings as 2 lakh. According to the Tandon second method of lending, what is the maximum amount? Yes, maximum amount. Okay, not an issue, Krishna. Tandon method 2. We are talking about what? The TCAs only. Fine. What is the right answer here? Yes, second method we are talking about the TCA, and the maximum permissible bank finance will be what? How many percentage? 75%, right? What about the Tandon 1 and 3? What is the threshold limit for that also? The benchmark, as we call it. What will be the benchmark there? See, this question we have already discussed, right? The particular table we have already discussed in the numerical class also. That's why I'm asking everyone. Okay. So what will be the borrower's contribution here? Borrower's contribution will be 25%, right? 25% of your TCA. That will be 2.5 lakh. And the maximum permissible bank finance will be what? After you have subtracted from the TCA, the borrower's contribution, then you will be doing what? Then you will be subtracting the 2 lakh amount, right? Which is the ultimate borrowing which is mentioned. Yes, bank borrowing. I cannot see the correct answer till now. Yes, we have to deduct. First we have to deduct. So total asset It is given as 10 lakh minus your borrower's contribution 25%. Fine. So we are left with what? The working capital gap. What is that? In here, working capital gap will be what? The amount which is required by this firm, whatever XYZ company is this, it will be 7.5 lakh. Fine. This is the working capital gap. And from this working capital gap, you have to do what? Subtract these liabilities. Right? Other liabilities you will be subtracting minus these liabilities of 2 lakh. What will be the right answer? 5.5 lakh. Okay. Fine. So from this particular question, how you will be approaching the bank finance? Via the working capital gap. Fine. If you directly do 75% of your total current asset, that won't suffice because here the liability is also mentioned. Fine. Without liability, if it was there, then it was okay. Right? Everyone. Yes? Okay. Now I hope that everyone understood that why we are saying that whenever such type of question is there, you have to read the statement very carefully. Normally what we say that 10 lakh is there, okay, let's just multiply it by 75%, answer will be B. But no, wait and see whether there is current liability or not. When the liability is there, you have to factor in this number also, no? Yes, 7.5 minus 2, we get 5.5 as the right answer, option C. Good. Okay. And for all of you, when we talk about the benchmarks, for the first method, it is working capital gap, fine. 25% of the working capital gap. Then we have total current assets, again, as the basis of calculation. And lastly, we have CCA, fine, CCA. Now let's move on to another question from where you can expect a direct numerical also, or for that matter, theoretical MCQ as well. So you have to tell that which of the following categories there, substandard D1, D2 or D3 in the case study. No, in Tantan 1, so it already has the working capital gap. No? In Tantan 1, it already has working capital gap as the benchmark. Yes, that's why we are coming up with this series, so that all of you who have done their syllabus, who have revised them, the important topics again and again, they do not forget during this last minute. Right? Yes, I'll be explaining this, don't worry. Greenfield Infrastructure Limited took a loan of 10 million from the commercial bank. The company initially made the regular payments. Fine. Initially, the company has made regular payments, no issue whatsoever. However, due to a severe market downturn, the company stopped making the payments on 1st January 2023. So since 2023, there might be a case that the loan will become NPA, and indeed, the bank classified the account as NPA on 1st April 2023. Right? As of May 1st, 2025, the company has still not made any payments. No payments have been made as of 1st May 2025. And the bank's internal auditors believe the likelihood of recovery is significantly decreasing, though the asset hasn't been written off yet. So how should the bank classify this loan asset as of 1st May 2025? The date is mentioned. Fine, the date is given to you. It is classified in the NPA category since 1st April 2023. What happens on your May 1, 2025? Whether it is D1, D2, D3 or substandard only. No, it won't be substandard. Substandard, though, it has become already by the year of 2024 itself, right? April 1, 2024 till April 1, 2024. Fine, substandard, and then next till your April month of 2024, it will be what? D1 category. Now in May month of 2025, it will become the D2 category. It will be classified into the D2 category. 2 to 3 years have been there. Yes, yes, good. D2 category will be the right answer. Okay, so C is the correct answer here. Simply NPA date 1st April 2023. Substandard phase will be up to April 1, 2024, right? Then from your 12 months to 24 months of being NPA, that is 1st April 2024 to 2025, it will be in D1. As we move towards the May 2025, the loan will become, it has been an NPA for 2 years, 1 month, fine. And this classification is known as what? D2 category, right? Up to the 3rd year's initial phase, it will, you can say, yes, whenever the 2nd year ends, up to the ending of 2nd year, this loan will be categorized as D2 category, right? Okay. Quickly, let's just revise then. So standard accounts which are regular, payments are on time, no issues whatsoever. Substandard, the loan became an NPA, but for less than or equal to 12 months. Early stage problem recovery still possible. Then comes your doubtful category. After this substandard, we have doubtful category, and it is further classified as D1, D2 and D3. So 1 to 2 years in the NPA, you have the D1 category. 2 to 3 years, you have D2 category, where the question was, the particular case in the question was, and your D3 category, greater than 3 years in the NPA. And once it goes beyond 3 years, or for that matter 4 5 years, then we will be having it termed as the loss asset, when the recovery could not be made even when it was in D3, right? So loan is not recoverable at all. Bank treats it as a loss. And for that, what we have? We have provisioning, the safety money kept for possible loan loss in future. And the provisions, they come from your deposits or from the loan, from the loans only. Find the profits which you have made on XYZ loans. From that profit, you will be keeping aside some provision for those loans which might turn into a loss asset or become NPA, right? Okay, and again, the table is very, very important when we talk about accelerated and regular provisioning. For the substandard, up to 6 months, regular provisioning is 15%, accelerated no change, because not required that you go extra mile and set aside more funds from your profit. Not required, at least for the secured portion of substandard asset. Then 6 months to 1 year. Now when we approach towards 1 year ending, then regular provisioning will stay at 15%, but accelerated provisioning will start to, you can say, increase. Substandard, for the unsecured ab initio, from the very beginning the loan was unsecured. Then up to 6 months, 25% will be the regular provisioning. Accelerated also is 25%. For infra loans, it will be 20% only, because the, you can say, asset age is far too big as compared to your non-infrastructure loans. Then we have 6 months to 1 year, 25% other than the infrastructure loans, and 20% for the infra loans, but accelerated provisioning stands at 40%. This is the most important of all. You must remember, substandard, unsecured, accelerated provisioning 40%. Then comes D1, D2 and D3. So second year, 25% for the secured portion, 100% for the unsecured portion, 40% accelerated provisioning for the secured, for the unsecured 100% only. From this category till the end, you will get 100% as the accelerated provisioning norm in case of your D2 and D3 also. So D2 and D3 as well. But in D2 category, for the secured portion, in case of normal provisioning, it is 40%. And for the unsecured, it is 100%. Doubtful 3, 5th year onwards, 100 will be the ultimate number which we have to remember for the normal provisioning, fine. And more time in NPA plus less secured, whenever there is unsecured loan, you will be pushing a bit harder and ultimately keeping aside more provisions for such loans. So higher provisioning will be there. Unsecured, always high risk is there. Quickly it goes to 100%. Just now it was 40%. Quickly it is 100%. And secured, it gradually increases 15 to 25 to 40 to 100%. Right? So what is regular and accelerated? Simply, When we talk about regular provisioning, whatever profit you are making out of XYZ loans, you set aside some type of funds, some type of funds as per the RBI. But accelerated provisioning kicks in when you see that your accounts in your banks, they are becoming NPA at a much faster rate. Fine. So much faster pace, the NPAs are there in your bank, and to match this pace, you need to quickly set aside the funds for the provisioning. That is why the word accelerated provisioning. Aggressively, you have to look for the provisioning from the profit which you have gathered from loans. Okay. Fine. Now let's talk about the another case. MSPQR is a textile trading company. The projected annual turnover for the coming financial year is 300 lakhs. The company requires a minimum of 25% of your projected turnover as the total working capital, minimum of 5% of its projected turnover as the borrower's contribution to the working capital, that is margin. The working capital to be contributed by the borrower, that is the margin, will be what? Dash rupees according to the turnover method. D2 timing. For D1, let's just start from the very beginning. For the D1, it will be what? 12 months, fine, 12 months to 24 months. Because first of all, for the 12 months, we will be having what? NPA has occurred, fine, this is the first thing. Now, for the 12 months, it will be in the substandard category. After that, from 12 months to, you can say 24 months, fine, we will be having the particular asset in the doubtful one category. Beyond 2 years, fine, beyond 2 years, you will have it in the D2 category, right? Beyond 2 years, 24 months plus. Accelerated for quick mortality account? No. Simply we are using the word accelerated provisioning because the bank feels that more and more loans are turning into NPA, and we will require more amount from our profits to set aside to utilize that amount for the recovery of the loans. Right? Correct? What is the right answer for this question? Everyone. Yes, provisioning norms will differ. Na? Provisioning norms will differ according to your category and according to the pace also. Regular provisioning versus the accelerated one. Yes, the correct answer is option A, 15. Right? 15 lakhs. Simply, the projected turnover stands at 300 lakh, right? Yes, it is at 300 lakh. The company requires a minimum of 25% of the projected turnover, your TWC, minimum of 5% of the projected turnover as the contribution. So what is the projected turnover? 300 lakh. 25% is the ultimate of the projected turnover will be your minimum amount. So first we will be calculating this amount, right? Which will come out to be what? 25% of 300 lakh, which will be 75, right? Minimum of 5% of the projected turnover of the borrower's contribution to the working capital, that is margin. The working capital to be contributed by the borrower, the margin will be what? Dash lakhs according to the turnover method. So according to the turnover method, it is 25%, right? So directly you can answer the question as option A. The borrower is required to contribute a margin of 5% in, 5%, not 25%, 5% in case of your turnover method. Directly also you can answer, right? No need to calculate first the 75%, then subtract it with the 5% and then arrive at the final 5%. Directly you can answer from here also. 300 lakh, multiply it by the 5%, right? Because the turnover method is asked. 15 lakh will be the right answer. Okay, so borrower's contribution will be 300 lakh. 5% of 300 lakh will be 15 lakh. And if somebody asks you the MPBF here, what will be the right answer then? So total working capital will be 25% of 300 lakh, which is 75 lakh. And out of this 75 lakh, what will be the borrower's contribution? It will be 15 lakh, simple. And what will be the maximum finance which you can raise from the bank? Simply subtract these two, you will get 60 lakh as the right answer. Numericals anywhere around 15 to 20. Fine. If the exam is difficult, let me just tell you one thing. If the exam is difficult, then they can ask you 15 to 20 marks of numericals alone. If the exam is moderate, then hardly 7 or 8 numericals will be there. And if it is easy, then to 3 to 4 numericals, max to max, 3 to 4 formula based questions. Fine. So it depends upon the level of difficulty. Like in May 2025, the exam was difficult. They asked approximately 15 to 20% of the questions from the formula based topics. Yes, directly you can do. Directly you can do. I was just trying to explain that based on the previous numerical which we have done for the working capital gap. Okay. Now let's try to answer the KCC limit. The farmer owns 10 acre of the land, plans to cultivate wheat on 5 acres, sugarcane on the remaining 5 acres. And when we talk about to determine the crop loan limit for the first year, the bank considers the base cost of cultivation and adds 10% of the post-harvest or household requirements and another 20% for the farm asset maintenance. For the second through the 5th years, a 10% annual escalation is applied to the previous year's limit. What will be the crop loan limits for each of the 5 years? Yes. Such topics we have done already. Different questions we have done already. But still, by the end also, you will be having some questions in your mind. That is why we keep on saying try to practice again and again. Fine. So there are limited topics from where the numericals can be asked, but they are quite tricky. Right? Depending upon the situation, you have to choose what to add, what to leave, like that. Okay. Then so it will be very easy for all those who are in the agri finance or maintaining the KCC files of a branch. Definitely a very simple question. So how you will be answering? First of all, scale of finance. I mean, what is the scale of finance? 15,000 per acre is given on 5 acre and 25,000 per acre on the remaining 5 acres. Simply multiply these two with the respective area, acreage as we call it. Then you will get the one component. In that, add 10% of the one component and 20% of the one component so that you will get the first year's limit. Fine, first year's limit will be there. Then once you get the first year's limit, then simply second year's limit will be what? First year's limit plus 10% of the first year's limit. Similarly, third year will be what? Second year's limit plus 10% of the second year's limit. Like that, for the fourth year also, you can calculate. Fine. The third year plus the 10% of the third year. For fifth year also, fourth year plus 10% of the fourth year. Right? Okay, 25 branches, that's huge. And what are the number of files? Because what are the number of files which you are dealing with? Yes. What is the right answer, everyone? Okay, so many of you are answering A as the right answer. Okay, yes. So first will be what? Let's just see the first only. Fine, if we calculate the first one, then every other option we can easily eliminate. So it will be what? For the first. The total crop cost will be what? Total crop cost, the first component. 15,000 multiplied by 5 and here we have 125, so 2, right? 2 lakh will be there. And in the 2 lakh, when you add 10% of 2 lakh and 20% of 2 lakh, effectively you are doing what? 30% of 2 lakh, right? Directly you can do that also. 30% of 2 lakh is what? Everybody. 60,000, fine. 60,000, add it in your 2 lakh. Correct answer will be 2.6 lakh. Correct answer for the entire question stands at option A. Yes, yes. Good, good, fine. So I hope that if the same question is asked in the exam, we'll be able to handle it. Okay, let's just revise the formula, revise the, you can say, calculation for those who have not attended the class of your numerical session. So first of all, you have to calculate the base cost, the first year as we call it. So your acreage is 5 acre for the wheat and the scale of finance is 15,000. So simply you have to multiply both, 75,000 will be there. Then we have for sugarcane 5 acre multiplied by 25,000. The finance is mentioned there in the question, 1.25 lakh you can say. Total will be what? 1.25 lakh plus 75,000, 2 lakh. Add the components 10% and 20%. So you can either go with the separate addition, or for that matter directly you can do what? 30% of this total crop cost. That will give you the right answer as well. 30% of 2 lakh is what? It will be 60,000. Directly you can add 60,000 in 2 lakh and get 2.6 lakh also. And save some time. Then we have second year again 2.6 lakh plus your 1.10. Always remember such small tricks for your exam, because what are you doing in the second year? You are doing simply first year's limit plus 10% of the first year's limit. If I take common the first year's limit, fine, just let me take the common, then here we will be having what? 1 plus 10%, and 10% is what? 0.10. So it will be what? Second year's limit, can I write it like this? First year's limit multiply by 1 plus 0.10. It will be 1.10. Fine. Directly. Yes, everybody agrees. Directly we can answer this question. Second year, the first year limit multiplied by the 1.10 factor. Third year, the second year's limit which we have calculated here, just multiply it by 1.10 factor. Then your fourth year, third year limit which we have calculated here, multiplied by 1.10 factor. And for the fifth year also, the fourth year limit you have calculated, multiplied by 1.10 factor. Right? So try to save time by these small tricks also in the examination. Okay. Fine. Renewable. Okay. Renewal is also there. Daily basis process. 4 agri loans. Okay. 4 agri loans. KCC only. Fine. Zenith, is the calculation fine with you? With everybody? Fine. Now let's move on to the next question. What is the working capital requirement? WCR here when we have all the data with us. MS, ABC, and enterprise is engaged in the ready-made garments manufacturing activity. The relevant operational data is as follows. So we have procurement of the raw material as 30 days, conversion process time period 15 days, average holding period 15 days, and your average collection period is 30 days. So the number of days in a year, we take 360 days as a base, fine, and add these days for your working capital, fine. Per cycle we will be calculating. So it will be what? 90, 15 plus 15, 30 plus 30 plus 30, 90 days, right? So number of cycles, we will be having how many cycles? 4. And when we divide this 4 by the annual operating expense, we will get the working capital requirement. What is the right answer? 15 lakh. Right. So now I hope that these questions, such questions, you will be answering within 10 seconds. Within 10 seconds, right? Some will answer it in 2 or 3 seconds also, but let's just keep a benchmark of 10 seconds. So step 1 will be calculate the total operating cycle. Step 2 will be number of operating cycles per year you have to calculate. Then working capital requirement, the total operating expense divided by the number of cycles, 15 lakh is our right answer. Now let's just see some formula based question quickly. DSCR formula. What is the formula of DSCR? A company has net profit of 4 lakh, depreciation 1 lakh, and interest on the term loan as 2 lakh. Annual installment is also given as 3 lakh. What will be the right answer for DSCR? Such 0.5 marker questions can be asked. So we have seen a big case study for the KCC, but on the other side, you should not ignore such small questions also. Fine, these are also very, very important. Yes, DSCR, PDI by II, fine. PDI by I2, that's how we learn it. Profit, depreciation and interest, fine. PDI divided by interest plus your installment. So 4 plus 1 plus 2 divided by your installment as 2 plus 3. Fine. Your installment is 3 and your interest is 2, right? So 7 by 5, correct answer comes out to be approximately 1.4. Yes, B is the right answer. Simple. Okay, so if you know the formula, if you remember the formula, a very, very simple question is there for you to grab 0.5 marks. 0.5 marks directly you will grab from such questions. Yes, good. Fine. Now let's try to answer some questions. Some 0.5 markers here in front of you from the module D. Yes, we are talking about module D, I guess. Yes, module D. Okay, in previous question, what we have done, added all the number of days, fine, starting off with the procurement of raw material, then providing the finished good, then for the credit, fine. So the number of days we calculated as 90 days, and per 90 days, or for that matter, per year, you will be having how many cycles? Because 1 year we have as an equivalent to 360 days, fine. So 1 year, how many cycles will be there? The working capital cycles will be there. So simply 1 year divided by the 1 cycle which is there. So 360 divided by 90 will get 4 as the number of cycles. Fine. Sheikh, I hope that it is okay with you. Okay, these are small questions. Just try to answer everybody. Then we'll be solving one case also. These are previous year questions. Fine. 0.5 marker, 3 previous year questions we are seeing. Insider trading refers to what? Employee making use of confidential information? Yes. Passing on the confidential information to relatives, friends? Yes. Okay, multiple choice. Trading in the stock market without informing the bank. That is also correct. All of the above is the insider trading. Job discrimination means an employee being denied opportunity based on what? Race, religion, caste, sex, or all of the above. All of the above, right? So this is also D. This is also D. Bank employees are expected not to accept the bribes, while credit appraisals, yes. Monitoring and recovery of loans, again yes. Marketing of the bank products and services, again yes. All of the above will be the right answer. Fine. And what if in the exam all the questions are like this only, right? What will be the score then? But we cannot be very sure, because they will ask you such kind of questions. The big questions they will try to give you in the exam. Yes, D will be the right answer. Now let's just talk about the case study, right? One case is there, and you guys tell me that this case is based on which of the topic, and you have studied that topic also. Yes, everyone, try to answer this question. It is based on a case of your public sector bank itself. Public sector bank. Which topic are we talking about? Anybody who can tell me? Okay. So, Miss Ananya, a senior manager at the large public sector bank, oversees the agricultural credit division. During an internal review, she discovers that several high value crop loans were recently settled under the debt relief scheme despite the borrowers not meeting the mandatory eligibility criteria. Fine. So all those who are working in the agri division, you can relate with such type of cases also. Upon further investigation, she finds that these borrowers are closely associated with the local political figure and that the documentation was allegedly bypassed by her immediate superior, the regional manager. Fearing a massive loss to the bank and a breach of public trust, Ananya decides to act. Following the Public Interest Disclosure and Protection of Informers (PIDP) resolution, she prepares a detailed report including the specific account numbers and the procedural lapses. She submits this directly to the designated nodal authority, ensuring she includes her name and signature as required. Okay, so the name and signature which is required while giving the application under the whistleblower policy, while requesting that her identity be protected. Shortly after, she receives an informal warning from her regional manager to drop the matter or face the transfer to a remote non-active branch. Right? So, under the PDP resolution applicable to public sector banks, which entity acts as the designated authority to receive such complaints? SEBI, CVC, IBA or ED? Correct answer is Central Vigilance Commission, option B. Fine. Most of you are with B only. Good. Yes, B is the right answer. Then, what specific element of Ananya's action ensures her complaint is valid under the whistleblowing framework? Under the whistleblowing framework we are talking about. The complaint was made verbally to her peers. The complaint was submitted anonymously to avoid the detection. Yes, avoid the detection. The complaint was written, signed and contained verifiable facts. The complaint focused solely on her personal disagreement with her manager's leadership style. So verbally, so you cannot say. Directly personal disagreement, again you cannot say. And in such questions, the theoretical questions, the questions from your ethics module, always remember one thing: whatever type of question is there, try to eliminate the options to arrive at the best answer. Otherwise, if you try to find only one statement out of four, it will be very much difficult. First of all, eliminate, then arrive at the most accurate of the remaining options. Yes, what will be the right answer? When we talk about the complaint under the whistleblower policy, the whistleblower framework, what it states that the complaint should be in written, signed and must contain some verifiable facts which you can verify. It should not be like it is my assumption that the corruption is ongoing in my workplace. No, it must be having some verifiable facts. C is the right answer. Okay, yes, C is correct. So when we talk about the third question, but before that, let me just give you one important thing here, important observation. The complaint was submitted anonymously to avoid detection. If you have not read the whistleblowing framework, you might answer B as the correct one. Right? But always remember to answer the most accurate. That is what we want to suggest all of you. Fine. For the third, if the bank management intends to take punitive action like transfer, etc., against Ananya, claiming her complaint was malicious, what protection is she generally entitled to? What kind of protection are we talking about? Immediate promotion, protection against victimization under the nodal authority who can intervene to stay the transfer, immunity from all the future performance appraisals, or for that matter, legal representation paid for by the RN, regional manager. Yes, we are only talking about the protection against victimization. Fine, you should resolve the case. Rather than resolving the case, you are providing the punitive transfer to this particular employee. This is not acceptable. So B is the right answer. Yes, good, good. Yes, that's what I was trying to say. Na? You do not submit it anonymously. Fine, your particular you can say designation, or for that matter signature, will be there. Fine, you will be writing it down and along with that signing it also, plus providing some facts also which are backing your claim which you have made in this particular scenario. Right? So it is not anonymous. Yes, 2 marker question, you can say that they can ask this question for 2 marks. Which of the following is a fundamental requirement for whistleblowers disclosure to be investigated by the nodal authority? Fundamental requirement. So the disclosure must be leaked to the media first? No. The whistleblower must provide their identity, as anonymous complaints are generally not entertained under PDP. That is the reason why the second question which we were seeing there, B, was wrong, because identity must be provided, otherwise your anonymous complaints, they are not entertained under this particular PDP policy. The disclosure must involve sum of at least 100 crore. The amount is not relevant. Fine. If you have verifiable facts, you can directly approach via the PDP. The whistleblower must have approval of the bank's board of directors. What will be the right answer here? Everyone? Yes, B is the right answer again. The whistleblower must provide their identity, as anonymous complaints are generally not entertained. Okay, so what all important things we have to remember when it comes to whistleblowing in the banks? First of all, the whistleblower policy for the public sector banks and RBI was brought under the purview of CVC, Central Vigilance Commission, with effect from 21st April 2024. But when we talk about your protected disclosure scheme for your private sector and foreign banks, RBI came up with this particular scheme in 2007. Earlier, when you talk about the public sector bank and the RBI, they are still under your CVC only. But specifically for the foreign banks, for the private sector banks, RBI bought out the protected disclosure scheme in the context of whistleblower mechanism in these 2 categories of banks. What important things are there? So important aspects will be what? The scope and coverage for the banks. Employees of the bank, customers, stakeholders, NGOs, and member of public can lodge the complaints. Fine. So employee of banks are there who can lodge the complaint directly under this particular whistleblowing framework. What is the procedure? Procedure is important, right? The complaint should be in a sealed envelope, superscribed as complaint under protected disclosure schemes for the banks. Fine. Mark this highly important, sealed in envelope, and you have to mention this. And it is addressed to the Department of Supervision. The name, designation, address of the complainant must be given. That is why we were saying that it is not anonymous. Then complaints may also be made in the email form. That can also be made, no issues whatsoever. The complainant should ensure that the issue raised by him involves dishonest intention or moral angle, and it must be verifiable. You must back it with some facts. Handling of the complaints by the RBI. So simply RBI will not issue any kind of acknowledgement once the complainant has provided the particular letter to RBI. RBI won't be acknowledging it because they have to do what? Protect the identity of the complainant. In any clarification, if it is required, then what will RBI do? Then RBI will get in touch with the complainant. Most of the banks are subject to the Companies Act 2013 under when we talk about the private sector banks. The act ultimately and the rules framed thereunder contain certain provisions requiring specified categories of the companies to have a vigil mechanism. So different categories are there in the Companies Act also, different types of companies. Not important for our exam, just you should remember that whether RBI will be in touch with the complainant or not. Yes, if they want some facts, if some clarification, then yes, they will be involved, RBI will be involved. Otherwise, no kind of acknowledgement will be given by the RBI. Okay. Fine. Whistleblowers Protection Act 2011 received the assent from the President of India in May 2014. And when we talk about the protection of genuine complainant, it is the responsibility of Central Vigilance Commission only, that is CVC. Fine. Okay, now let's just try to answer the question based on your module C. Yes, IT has broadly used 2 different avenues in banking. One is communication and connectivity, other is what? DRM, BPR, IPR or DLP. Let me see some questions also the students were asking. See, ED though is a popular name now. I mean, everybody think that ED is there for every crime which is happening, but it is not. ED simply it is for your PMLA laws, fine, to enforce the prevention of money laundering. We have the ED for all those corruption cases, or for that matter, when we talk about the dishonest employees are there, CVC is the body which will investigate. Fine. So mostly money laundering, ED, and the rest is your CVC. Okay. Fine. So these are again 0.5 marker questions. Let's just try to answer them. IT has broadly been used under two different avenues in banking. One is communication and connectivity. Another one is your business process re-engineering. BPR will be the right answer. RBI's committees on mechanization in the banking industry 1984 and computerization in banks 1988 were headed by Y.H. Malegam, Shri Y.H. Malegam, C. Rangarajan, W.S. Saraf or M. Narasimham. Again, B is the right answer, Dr. C. Rangarajan. Then intellectual property right, IPR, allows its creator or the innovator to use the IP for the intellectual property for his or her own benefit, and allows the government also to use such work. No, nothing like that. Prohibits any third party use of such work. B is again correct. So right answer is B, B and B. Okay, everybody is on the same page here for the B. Yes, B is the right answer. When you talk about the committees, two important committees are there, 1984 and 88, both headed by Dr. C. Rangarajan. The Committee on Mechanization in Banking Industry was formed in 1984. Computerization in Banks, 1988. So always remember the words. Mechanization, 84, computerization, 88. After the Committee on Computerization, you will find that active planning was made in the banking industry to computerize the entire industry, entire branches, all the entire network. And in 1984, the Committee on Mechanization initiated to improve the customer service, bookkeeping and MIS. Fine. So it was more or less the internal phenomena only, that we want to have a robust internal phenomena so that we can improve the customer service. We can have the bookkeeping in the digital format in the computers. Fine, no need to do it manually anymore, and maintain our MIS, management information system, also pertaining to various accounts as well. Then computerization, it provided the plan for the entire computerization for the 5-year period of 1990 to 94. Again, let's talk about the 0.5 markers. Fine, let's just quickly see these set of questions based on your PPI. Fine, I think there are 8-9 questions based on PPI itself. Yes, all are B. So in your module C, you will find mostly 0.5 marker questions. Let's see one by one what will be the right answer here. So which type of the PPI is used only with the issuer? Fine, like your Amazon gift, closed, semi-closed, open, or none of the above. When we talk about Amazon gift card, it is the example of what? Your closed system PPI. A is the right answer. Then we have what KYC is required for the closed system PPIs, whether it is minimum KYC, full KYC, no KYC, or either minimum or full KYC. For your closed system, for one Amazon gift card, if you want to buy it on the Amazon, do you think so that you have to do KYC? Fine, no, not required. So C is the right answer. Then, is there a specific maximum limit for the closed system PPIs? Maximum limit for the closed system PPI, 10,000, 2 lakh, no specific limit, or 1 lakh. There is no specific limit whatsoever is mentioned for your closed system PPIs. Again, C is the right answer. Okay, so ACC is the right answer here. Yes, no KYC. Good. Correct. C is the right answer. Next, semi-closed PPI. They are usable at what? Everybody try to answer this like 4, 5, 6. Give me in one line itself. 4, 5 and 6. What will be the right answer? So semi-closed system PPIs, they are usable at only the issuer, a group of merchants identified by the issuer. Semi-closed, yes, a group of merchants only are participating in such type of PPIs, right? Then for semi-closed system PPIs with minimum KYC, what is the maximum limit? Semi-closed, what will be the maximum limit? 1 lakh, 10 lakh, 2 lakh, or no limit? Semi-closed, always remember it will be 10,000, the maximum limit with the minimum KYC. Okay, so one is B, yes, second is also B. This is, yes, this is B, this one. And when you talk about what is the maximum limit for the semi-closed system PPIs with full KYC, it will be rupees 2 lakh C, right? So B, B and C. Okay, correct? B, 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 and what about the last one? It will be C. So B, B, C, 4, 5, 6, correct? Okay, okay, Gopal. Yes, yes. The agenda is this only, that you guys find it useful. Now, next question. Open system PPIs allow the transactions at all the types of merchants, including what? Only online, cash withdrawal, gift card, or issuer specific stores. Issuer specific stores. Yes, what is the right answer? Cash withdrawals, fine. Open system allow the transaction at all the types of merchants, including your cash withdrawals as well. So B is the right answer. Then we have which authority can issue the open system PPIs? Only the issuer, only the banks, any bank with full KYC can issue your open system PPIs. So what is the right answer? C is the correct answer here, right? C is right. Then lastly, what is the maximum limit for the open system PPIs? It is 1 lakh. Okay. Right answer is option B. Okay, so B, C, B will be the right answer. Yes, B, C and B. B, C, B. Okay. Fine. Now let's just quickly go through the PPIs, prepaid instruments. Let's just try to revise them. Semi-closed, keep the example in your mind. Paytm wallet, it is a semi-closed one, from one wallet to another wallet only. Allow the purchases of goods and services at group of clearly identified merchants. When clearly identified merchants are there with the contractual agreement with the issuer. Cannot be used for the cash withdrawal or redemption. Fine, very important. No cash withdrawal, no redemption whatsoever is there. Open PPIs issued only by the banks. The normal debit card we are talking about. The prepaid debit card issued by the banks like HDFC, SBI, ICICI. And when we talk about the difference, the distinguishing factors here, closed, semi-closed and open. So closed system only with the issuer, like your Amazon gift card is there. For your KYC, no KYC is required in closed system. Maximum limit not specified, find no specific limit as such. Semi-closed, always remember, usable only at a group of clearly identifiable merchants. Minimum KYC, maximum and full KYC, two types of KYCs are done, and based on that limits are decided. For the minimum KYC semi-closed PPIs 10,000. For the full KYC, the limit stands at 2 lakh. For the open system PPIs, usable for all the types of transaction. Open system, every bank is issuing you debit card. Only the banks can issue with full KYC only. Fine, half KYC, partial KYC, 20% KYC, no, full KYC. And maximum limit is 2 lakh. Do remember this. Right? Everyone. Done? Now let's talk about the next question based on your chronological order for the stages of financing of terrorism. Terror financing. Let's just try to answer one question, small question based on this. Terror financing. So, what will be the right answer? Store, move, raise and use. Raise, store, move and use. Raise, move, store and use. Or move, raise, store and use. What will be the acronym which we have to remember? RSMU, right? RSMU, we have to remember that. Chronological order, RSMU. So, raise, store, move and use. B is the right answer. Done? B is the correct answer. Raise, store, move, raise, store, move and use. Yes, B is the right answer. Stages of financing of terrorism: raise, store, move and use. RSMU, that is what you have to remember. RSMU. And what about your money laundering? In case of money laundering, what was the abbreviation? PLI, placement, layering and integration. Fine. Now, under the monthly reporting obligations, which of the following scenarios would strictly require the submission of a cross-border wire transfer report, CBWTR? What will be the right answer? Yes, RSMU. Good, good. So cash deposit of 12 lakh into the domestic savings account, a wire transfer of 6 lakh from the bank in London to recipient in Mumbai, a receipt of 8 lakh by the registered NPO or your non-profit organization, or a series of domestic cash transactions aggregating to 10 lakh in 1 month. Two lakh. For the open, it is 2 lakh. Yes, what is the right answer? This reporting obligation we have seen, fine. In the first half of this lecture only, we have seen the reporting obligation. The correct answer is option B, wire transfer of 6 lakh from a bank in London to the recipient in Mumbai, CBWTR. So what are the reporting obligations? Let's just quickly revise. CTR, cash transaction report, 10 lakh or more, fine, the equivalent amount. Series of transactions aggregating to 10 lakh, also CTR. CBWTR, more than 5 lakh in India or from India to abroad. NTR, non-profit organization report, receipt by the NPOs more than 10 lakh is the amount. Counterfeit currency report, CCR, all the counterfeit currencies which you have received, all the counterfeit currency notes which you have received. Now let's talk about the STR. Fine, STR, not on the basis of your amount, but on the basis of some of the characteristics. According to the reporting obligations for the banks, which of the following statements regarding the filing of your suspicious transaction report is correct? Fine, try to answer this question, everyone. Yes, so banks must report suspicious transactions only if they exceed a specific monetary threshold. In case of suspicious transaction report, STR. STR must be reported to FIU India, Financial Intelligence Unit India, within 30 days of the transaction date. A transaction should be reported if it appears to have no economic rationale or bona fide purpose, or the reporting is only mandatory if there is absolute proof of money laundering rather than reasonable doubt. So we have covered module A at length, module B at length, and some questions of D and C also. So today the prime focus was on the most important topics of A and B, because they are the maximum, they bear the maximum chunk of marks which will be scored in the actual examination. Tomorrow we will be having a mixture of all the four. Yes, everybody, what is the right answer here? For the STR, we are talking about which option? So there are varied answers. Some are saying B, some D, with and some are with C also. So transaction should be reported if it appears to have no economic rationale and bona fide purpose. Fine. So the correct answer is option C. Okay. So banks are required to report to FIU India any suspicious transaction, because if it is not having any rationale, why we are spending the funds from one party to another party, why it is sending, it must raise some suspicion. Na? So banks are required to report FIU India any suspicious transaction noticed by them within 7 days. Right? They're very, very important in establishing the suspicion. A reasonable doubt that it may involve proceeds of an offense specified in the schedule to PMLA, likely for money laundering, appears to made in circumstances unusual or unjustified complexity. You are not able to decipher that why this transaction happened. appears to have no economic rationale or bona fide purpose. Fine? No purpose whatsoever. You are just sending randomly the money from one account to another account. A reasonable doubt that it may involve financing of the activities relating to the terrorism. Fine. So all these four are very, very important when you talk about the reporting obligations of STR. For reporting the suspicious transaction, the value of transaction is not relevant. Fine. Even if it is for 1000 rupees, it must raise a suspicion, and if it raises suspicion, it must be mentioned in the STR and forwarded to the FIU India within 7 days of its establishment. Reporting is only mandatory if there is absolute proof. No, we are having some suspicion also, then also we can generate the report and send it to FIU India, because the name of the report is what? Suspicious transaction report. You do not have the concrete evidence that yes, this is the reason why the transaction happened, right? That is why D is wrong, C is the correct answer. Okay. Yes, I can say Chinna with C, Madhudi Val with C, and 13550 with C. That is good. Fine. All of you who have answered C as the correct answer. Excellent job, guys. What is the minimum monetary penalty per violation that can be imposed under PMLA? Per violation. Monetary 5,000, 10,000, 50,000 or 1 lakh. Yes, PMLA. We are talking about the non-compliance, fine. For the non-compliance, here it is not mentioned, I think, per violation for the non-compliance by the banks, fine, non-compliance. Okay, penalty which will be levied on the banks, monetary penalty on the banks, for non-compliance of your PMLA norms, fine. What will be the penalty levied on the banks? That should be the question. Yes, so the penalty will be 10,000. Good everyone. B is the right answer. 10,000 is the correct one. So banks face risk of penal actions by RBI and Director of FIU India, Financial Intelligence Unit India, for non-compliance with obligations cast on them under the PMLA and PMLR, the Act as well as regulations. PMLA has empowered the Director FIU to take any of the following punitive measures on the banks against its employees, managers, or for that matter, directors. They can issue a written warning. They can direct to take the specific remedial measures and to submit the action taken report on them, and also impose the monetary penalty with a minimum of 10,000, maximum up to 1 lakh per violation. Per violation we are talking about, fine. One violation, 10,000 is the minimum. Max to max you can levy 1 lakh as the penalty. Very, very important for our exam. Now, which of the following correctly identifies the 3 stages of money laundering cycle? This we have seen: PLI, placement, layering, and integration. B is the right answer. Placement, layering, integration. Now, with reference to the exchange earners foreign currency EEFC accounts, consider the following statements. These accounts are specifically designed for resident individuals or firms earning the foreign exchange through exports. The primary purpose is to allow the earners to retain their entire forex earnings indefinitely without even converting to INR. EEFC accounts are non-interest bearing accounts. What is the right answer? EEFC. Okay, so second statement is an extreme one. We are talking about what? That the primary purpose is to allow earners retain their foreign exchange earnings indefinitely. What is the primary purpose? It is for those particular individuals who are involved in the exports, fine? Exports of the goods and services. Okay, so second statement is wrong. Correct answer is 1 and 3. That is option B. Because specifically designed for the individuals who are dealing in exports, and these are non-interest bearing accounts. And when we talk about indefinitely, no, for some time period they can hold the forex with them without even converting. So B is the right answer. Yes. Yes. Here this is 1. Then we have this is as 2 and this as 3. Okay, the numbering was not there. So what is the right answer here in the RFC? For the RFC, what is the right answer? Primarily intended for returning Indians who were previously NRIs, allows for the holding of forex assets earned while individual was residing abroad. Fine. Resident foreign exchange account when you are residing abroad only. RFC-D for domestic who are there in India. Fine. When you are outside, RFC account. Unlike EEFC account, RFC account is interest bearing account. Yes, it is interest bearing also, right? RFC. Everyone. Yes, D is the right answer. 1, 2, and 3. All the 3 statements are correct. So when you talk about EEFC account, exchange earners foreign currency account, who can open? Resident individuals, the firms earning foreign exchange through exports or services. And what is the purpose? To retain a portion or all the forex without converting to INR, but not indefinitely. Some time limit is there. Key features: non-interest bearing is there. Fine. So it is non-interest bearing account. And in any of the convertible currency, you can hold the currency here in your EEFC account. Helps manage the forex exposure. The primary aim is not to hold it not to open it so that you can hold the forex for indefinite time. No, the primary purpose is to manage the forex exposure. Again and again, I do not want to convert it and give the ultimate forex fee for the exposure which I have in the case of the export services which I am providing. Then RFC, resident foreign currency account, returning Indians who were earlier NRIs. So purpose is to hold the forex assets which are earned abroad. Now you are returning, but you must have some earnings there also, no? Some savings kind of thing. So it can be maintained in US dollar, Great Britain pound or euro, and some more currencies are there. Interest bearing, it is interest bearing and freely convertible as well. Then we have RFC-D for the domestic residents. All the residents of India, they can have the resident foreign currency domestic account opened. Purpose is simple: to hold the foreign currency acquired legally. Like when we talk about you have gone abroad for vacation with your family, some gift somebody has given it to you, your relatives are residing in UK, they provided you some gift, now you are returning back to India, so you can keep that particular amount, the gift amount, in the RFCD account. Or for that matter, you are a frequent traveler, then also you can keep the funds which are left after your trip is over in the RFCD account. Fine. So gift, travel, honorarium, if some government is honoring you, some foreign government is honoring you with a prize money, that also you can keep in the RFCD account. Permits holding up the limits prescribed up to the limits prescribed by RBI, primarily for convenience and travel. Then comes your DD account. DD account we have seen, right? The diamond dollar account, one merchant case study we have seen today only. Who can open? Firms engaged in import export of diamonds, gemstones, precious metal jewelry. Purpose is simple: to facilitate the forex transaction in the diamond or jewelry sector. Key features: it requires at least 3 years of track record and 5 crore average annual turnover must be there. Okay. So 3 years and 5 crore of the average annual turnover, right? Fine. Now let's move on to the beneficial owner. Again, very important for our examination. A registered partnership firm is undergoing a compliance audit according to the defined criteria. Which of the following individuals must be identified as the beneficial owners? Yes, beneficial owners. Okay. So investor holding exactly 10% of the share in the capital. An individual owns 16% share in the firm's profit. Senior manager with no capital stake whatsoever, even though the several partners holding 20% each have already been identified. Or for that matter, a shareholder in the separate company that holds 5% interest in the partnership. What is the right answer? Minimum, right? Yes. So the individual who owns 16% share in the firm's profit, fine, that will be under the partnership firm declared as a beneficial owner, because minimum threshold is 15%. So B is the right answer. Here the individual is owning 16%. So let's just quickly go through this table. Company, for all the companies, the criteria stands at more than 25% of the share in capital or profit. Controlling rights also are taken into consideration, like appointing the majority of directors, control management, policy decisions like that. For the partnership, registered partnership, we have more than 15% share in the capital or profit. That is why the 16% was the right answer here in this question. Body of individuals, association of persons, more than 15% of capital, profit or property. Then we have the trusts, the registered trusts as we call them. Author, trustees, beneficiaries having 15% or more in trust, or for that matter, exercising effective control. And apart from these also, they can ask you a question, simple question based on this, that supposingly these criteria are not met by anyone, then what? So if no natural person fulfilling the criteria can be determined, then the individual who is holding senior managing position will be considered as the beneficial owner. Fine. So mark this highly important. Directly they can ask this as well. Fine. Now what is the data rate supported by the optical fiber? Simple question from module C, 0.5 marker. Optical fiber, 2 megabytes per second, 2 gigabytes per second, 20 gigabytes per second, or 200 megabytes per second. What is the right answer? Yes, we are talking about the transmission medium. Different types of cables are there. So coaxial we have twisted, we have optical fiber, and each one of them are important for our exam. Just one important characters we have to remember. Yes, try to answer. 2 gigabyte. Yes, 2 GBS will be the right answer. GBPS. Right. So B is the correct answer here. So we have twisted pair cable, we have coaxial cable, and we also have the optical fiber. See, what is the difference? Simply stated, twisted pair cable is what? A particular bunch of twisted paired cables. Right? Twisted paired cables clubbed together. We have twisted paired cables like this. You can see now they are entangled, like pink, green. Then we have blue and yellow. They are entangled. So when we club all these, we will have the twisted pair cable. This entirely will be known as twisted pair cable, because they are having what? A bunch of these twisted cables. Coaxial cable, so two axes will be there. Fine. One will be your copper core. The core will be of copper. And next is your insulating material. Fine. Two types of materials will be there along with one outer conductor as well. Lastly, we have the optical fiber, the most talked about transmission medium, which utilizes a fiber core. Fine. So they can ask you about the core also. Coaxial for the copper core, optical for the fiber core. They are having the core as the fiber. Now, when you talk about the important aspects, what we have to remember for the twisted pair. So twisted pair consists of two insulated copper wires, and these are useful for connecting the terminals to the computers up to a distance of 150 meters. Directly they can ask you this question. What is the distance? 150 meters. Up to 150 meters, you can easily connect them and ultimately contact each other as well, because these are what? The transmission mediums. Then coaxial cable, inner copper core is there, and it is held in position by a circular spacer. This is the spacer we were talking about, and this is the spacer. Then we have the cable can carry digital signals. Very high speed is there, 500 megabytes per second. Fine, 500 Mbps. But it is not more than the optical fiber, where you can send what? Up to 2 gigabytes per second. It supports a data range of 2 gigabytes per second. Transmissions are not affected by electromagnetic interference, whatsoever interference is there in the entire network. High quality, low error rate is there. The data transfer is through very thin glass or plastic fiber with a beam of light. Fine, this is the light we are talking about, the light ray. This is the light ray, yes, the top of it. Fine, the top will be the light ray. Then the light source is a laser beam driven by the high speed, high current driver. And for this particular reason only, these days, for security reasons, light emitting diodes are used. Fine, LEDs are also being used under this transmission medium of optical fiber. Right. Now, what is the primary advantage of using the simplex transmission mode? Yes, we'll be doing the types of mortgages. We will be covering the CPA. We will be covering your RBI ombudsman scheme in detail. We will be doing the CICs also. Then we will be doing some legal discussion as well. The various laws are there related to your module B. All these we will be doing also in tomorrow's class. Fine. So these are left, the topics whichever is left, we'll be covering that in the tomorrow's revision class as well. Fine. Okay. So when you club both these classes, you will have everything. Since it's a vast subject, we have divided it like this only. Okay. So it allows simultaneous two-way conversation, simplex transmission mode. It conserves the bandwidth by alternating alternating directions. Or for that matter, we have, it uses the entire capacity of the channel to send data in one direction only, simplex. And lastly, it provides the best performance for the telephone calls. What is the right answer? Telephone calls? No. What is the correct answer? Tomorrow we will be having the class at 6 p.m. for YouTube, and for the paid class of your Power Pack revision batch, the timing is 6:30 a.m. 6:30 in the morning, 6:30 till 7:30 a.m. Okay. So primary advantage, simplex transmission is your entire capacity is being utilized of the channel to send the data in one direction only, single direction we are talking about. This class will be, I think, for more 10-15 minutes. So what are the important points when we talk about the mode of transmission on the basis of your direction? Simplex, half duplex and full duplex. So type of communication, only single direction, unidirectional communication in the simplex. One at a time. When we talk about bidirectional, you give one input here in this direction and the output is received after some time in the another direction. So one at a time is there, but bidirectional. Then comes simultaneous communication. You are sending some signal simultaneously, the another signal is from the different side. Then you are replying another signal from the another side. Find simultaneous exchanges happening, bidirectional. Okay. Now when we talk about your exchange of the data, how the data is exchanged, that is important for the simplex, half duplex and full duplex. That makes the difference altogether very important. So when you use keyboard, just imagine that right now you are just typing on your laptop. So what is happening? Only you are giving the information to your laptop. Right? This is a simplex transmission mode of communication, unidirectional. Right? Then the sender can only send the data, can't receive it back. Fine. The laptop won't type it. It will give you the information, right? Half duplex, when we talk about the half duplex, sender can send as well as receive the data. So walkie-talkie, the prime example, you use a walkie-talkie, you say alpha, beta, 1, 2, 3, can you hear me? Then after 1 or 2 or 3 seconds, they will say alpha, beta, gamma, yes, I can hear you. That is what bidirectional, but one at a time. It's not that you are talking on mobile phone, right? That you are shouting at your friend, the friend is shouting at 2x noise, right? Full duplex, sender can send and receive the data simultaneously, like in telephone, right? So performance in simplex, the least performance when we talk about the speed of transmission or the quality as well. Half duplex, better, it is better than the simplex one. Full duplex, it is the best. Fine, the communication is happening simultaneously. Okay, so yes, that's how you should remember. Simplex, yes. FM is also simplex, good. Fine. So simplex, half duplex, and full duplex. I hope that you will retain these simple things for the modes of transmission. No, for RBWM, the classes will begin in the next week, I think, right? From Monday. I won't be taking the RBWM classes. Where is the headquarters of Swift located? So Swift, everybody must be knowing that it is a financial messaging platform. What is the full form of Swift? They have asked n number of times, but headquarters they have not asked. Fine, not often. London, Paris, Brussels, or Geneva. Correct answer is Brussels. Right? C is the right answer. Yes, TV also you can say. So a number of examples are there. Whatever you want to have in your mind, you can. Fine. So TV is also one of the good example, I would say. SWIFT, simply Society for Worldwide Interbank Financial Telecommunications, was founded in 1973 by 239 banks spread over 15 countries. Objective simple, creating a unified international transaction processing and transmission system. Fine. Unified international transaction system so that we do not have overlapping messages. Once the financial transaction message is sent from UK to India, it must be replied back. You cannot hold the particular financial transaction message. It is a cooperative, non-performing organization, non-profit organization established under the Belgian law with its headquarters in Brussels. Brussels is the capital of Belgium only, right? It operates a financial messaging platform. Fine. Right. Now let's move on to the Infinet. Membership in Infinet network is restricted to which of the following? Membership. So Infinet network, who can be the members here? Private tech companies and the retail investors, retail stock exchanges only, RBI, member banks and financial institutions, or any citizen with a valid bank account. Yes, Society for Interbank Financial Transaction. Good. That is the full form. So Infinet restricted to whom? RBI, member banks and the financial institutions. C is the right answer. Yes. So when you talk about Infinet, simply it is what? Indian bank and financial sector, the particular backbone of your Indian banking and financial sector, and the full form is Indian Financial Network, that is Infinet. Indian Financial Network. It is a membership only closed user group. Fine, it is a closed group comprising of RBI, member banks and the financial institutions. As the network platform for the National Payment System NPS, mostly catering to the interbank transactions, interbank applications like NEFT, RTGS, Infinet is also used by the member banks to access the RBI, eKuber, CCIL system and other RBI mandated systems. So if you are a member of Infinet, Infinet can access your platforms also. Like RBI, we have NDS OM also, which we have read in module D of IFS. Then we have RBI Kuber also, CCIL systems also, in which the CCIL is acting as the tri-party agent. It is managed by IFTAS, Indian Financial Technology and Allied Services, which is the wholly owned subsidiary of RBI. Very important. IFTAS is the wholly owned subsidiary WOS of RBI. Remember this. Then along with that, we have Structured Financial Messaging System, SFMS. What is this SFMS? Similar to your Infinet only, it is just a part of your financial messaging. It serves as the backbone messaging platform and the Indian standard for interbank financial messaging for your central payment system. And IFTAS is what? It is also the service provider for NEFT application. In central payment system via NEFT and RTGS, your SFMS is providing the services, and IFTAS, it is the service provider for your NEFT application. And this IFTAS is since which particular year? Established in February 2015 by the Institution for Development and Research in Banking Technology. Simply an autonomous organization funded by the RBI, and it is based on the recommendation of which group? Rangarajan Committee 2009. Okay. So very important. Infinet, SFMS, IFTAS and your SWIFT. Now let's talk about one small question based on the DG Dhan Abhiyan, Module C. Which initiative was specifically launched under the DG Dhan Abhiyan to educate citizens in rural, semi-urban areas about the digital payment ecosystem via a free-to-air channel? Free-to-air channel. Find DG Dhan Abhiyan. Whether it is your DG Merchant, DG Shala, Smart Trader, or Cashless India. What will be the right answer? Initiative specifically under the DG Dhan Abhiyan for educating the citizens in rural and semi-urban areas. For your digital payment, yes, correct answer is option B, DG Shala. Like Part Shala, we have DG Shala for educating the rural and semi-urban area people. Yes, B is the right answer. So, in order to promote cashless transaction, Ministry of Electronics and Information Technology launched a new campaign called as DG Dhan Abhiyan. This DG Dhan Abhiyan was launched to enable every citizen, merchant, smart trader, and promote the digital payment in their day-to-day financial transaction. Under this Abhiyan, the ministry also launched a free air channel called as DG Shala, which will impart your information in your rural and semi-urban areas on digital payment. Find DG Shala, rural and urban areas, digital payment. DG Abhiyan, simply talking about promotion of cashless transaction. Very, very important. Done. Then comes your DigiLocker. What is DigiLocker? Most of us, we know that what is DigiLocker. You are keeping your documents in a safe but digitally. The app is operated by Government of India, lets you store a range of documents such as your school, college mark sheets, passport ID proofs, and many other in your digital form. It is easy, secure, free to download for both Android and iOS devices. Benefits: access documents anytime. Documents are issued directly by the registered issuers also, like your registrar offices there directly. It will be coming to your DigiLocker in your IT department, CBSC. Fine. Then we have a range of official certificates and your documents are accessible. Accessibility of document increases, no need to carry them again and again in the physical format. Cloud storage is also there, built-in cloud storage. You just directly have to activate it, and the particular storage space, it gets linked to your UIDI number, Aadhaar number. You can share the documents also online. Fine. So via the DigiLocker, can you share or not? Yes, you can share the documents online as well. Fine. Now, how does Peter Singer's view complement the concept of trusteeship? So, concept of trusteeship, module D, Mahatma Gandhi's view, but here they have asked you the Peter Singer's view. Right? Trusteeship, what will be the right answer? Peter Singer, he suggests that only the government should manage the surplus wealth. He argues that your individuals with surplus wealth would give most of it to those in life-threatening poverty. He believes that your capitalists should keep their wealth to reinvest in the global markets, or he claims that poverty can only be solved through competitive labor. What is the right answer? Peter Singer. Fine. So IIBF has asked the views of Mahatma Gandhi, but Peter Singer they have not asked till now. That makes it very, very important for our exam. What about Peter Singer view? And trusteeship, the concept of trusteeship itself is very, very important. Fine, so I can see the answers B, C, okay, B, fine, fine. Yes, everybody. Peter Singer simply argues that individuals who are having surplus wealth, they should give most of it to those in the life-threatening poverty. We're not saying that you should, raise somebody. No, not at all. Just provide the surplus wealth of yours to those who are living in abject poverty. So B is the right answer. Yes, B is correct. Okay. So philosophy of trusteeship, the concept starts with the discussion of Mahatma Gandhi. So Mahatma Gandhi explained that their capitalists should realize that the wealth in their hand is the fruit of hard work, toil, efforts, and the sacrifice of the workers. Right. So the workers who are working for the wealthy individuals, only because of their hard work, you are now having the money, the wealth, not money, the wealth, and other sections of the society as well. The capitalist, therefore, should act as trustee, right? Like we have in the mutual fund, the trusteeship services are there. Like that, the wealthy individuals, the capitalists, must act as trustee. And Peter Singer will come and say that yes, I fully support Mahatma Gandhi's view, and I have a similar view that each of us with wealth surplus to his or her essential needs should be giving most of it to the people suffering from poverty so dire as to be the life threatening, right? So abject poverty, extreme poverty, in fact in numbers, and when we talk about US dollar less than 3 per day if they are earning, then you must support such kind of individuals. This philosophy of trusteeship has its origin in Bhagavad Gita, which tells us about aparigraha, non-possession. You need not to possess everything. Then Nishkam Karam Yoga, selfless work, when you should work and let the world, let the universe decide what should be the outcome. Trustees have to create, preserve, and increase the wealth without expecting the enjoyment of wealth. Fine, that is your goal. You are just keeping your head very clear that yes, I will be earning money, and what I will be doing from that wealth, I do not care. Okay, so aparigraha. What is this? Non-greediness. We say now that this belongs to me, this belongs to me, this is mine. No, you should have a feeling of non-possession as given in the Bhagavad Gita. Right? Yes, yes. These are some you can say important themes, or for that matter theories of various philosophers, or for that matter some ethical gurus. Okay. So trusteeship, I hope that everybody will retain in their mind that yes, you must act as a trustee for the, you can say, people who are living in the abject poverty. Now, which of the following notions about business ethics is not a myth? So there are certain myths related to business ethics. Right? Myth 1, 2, 3, 4, like 5, 6 myths are there. Which of the following is not a myth? Business ethics change the people's personalities and suppress their individuality. Then we have business ethics cannot be managed and is largely a personal matter only. Right? You cannot manage it. Business ethics is just about corporate social responsibility, nothing else. Business ethics plays an important role in daily decision making and resolving the ethical dilemmas. What is the right answer? Which is not a myth, which is a fact. Fine, that you have to tell me. Which of the following is a fact related to your business ethics? Okay. So definition, I think there is only for the trusteeship. Fine, trusteeship. And this trusteeship for the wealthy to your poor. Okay, we'll see to that. Yes, what is the right answer here? Business ethics, not a myth. Everyone. So, which of the following is a fact? So, business ethics, it plays an important role in daily decision making, resolving the ethical dilemmas. D is the right answer. It is a fact, not a myth. Okay, D is right answer. Okay, for trusteeship, we'll do that. I'll put some keywords in the WhatsApp group. Okay, fine. Business ethics, the myths and reality. What is myth? Myth 1. A common myth is that business ethics changes people's basic behavior, but it is not. It is simply doing what? Managing the values. Then we have myth 2, that it do not need any kind of training. Find the employees, they are already ethical and they do not need any kind of training. But whether it is true or not, no, it is a myth only. The managers need ethical frameworks to choose logically and navigate the gray areas. Then we have third myth, that ethics cannot guide routine organizational activities. The truth is that decision making on daily basis, it is done using the ethical grounds itself. Then comes your myth 4, that in the business ethics adds nothing new, but When you talk about the protection of the stakeholders' interest, it definitely protects that. Why? Because you know that which type of code of conducts are to be made and how we should follow them. So it adds new things. That is a myth here, that it does not add anything. Myth 5, only about the business ethics is only about the good people preaching bad people. No, it is to work together. Fine, we are not categorizing somebody that this group of office is good, this is bad. No, we are working together and we try to be a better organization. Myth 6, that ethics cannot be managed at all, but the reality is it is always you can manage using your values and the culture systems which you have imbibed in the overall organization. Then business ethics is sometimes equated only with the CSR. So normally we feel that yes, in the business ethics, you are doing what? Only preaching that how the corporates must oblige the society via the corporate social responsibility. But it is much more beyond that. Broadly covers how a company handles all its responsibilities and the relationships as well. Fine. So this is also a myth. Fine. So such questions they can ask you in the examination. And that brings us to the conclusion of our today's class, which was Maha Marathon. Fine. So I hope that you guys learned something new and you enjoyed also the entire session. It was not like that why we are sitting in this session for the past 4.5, 5 hours. Okay, so the agenda was very clear to cover the maximum portion, the maximum important portions today itself, and the remaining important portions we will be covering tomorrow via the Maha revision. Fine, so revision class for the YouTube, it will be at 6 p.m. tomorrow now, and the remaining topics of all the modules will be covering there. Fine. And for our paid subscribers, we have arranged one special class in the morning, which will be 6:30 a.m. Here we will be learning some miscellaneous topics like some legal terms. We will be revising those. We will be covering more or less your CC, the CIC, the CPA, the RBI OS questions. Although we have provided the handouts, but we'll be solving some questions, more questions, in order to gain some more confidence. And then the types of security also we'll be doing here. Right? So all these are the agendas for morning class. But all of you, you must join this revision class, which is at 6 p.m. as well. Yes, yes. I will be sharing. Don't worry. I'll be sharing the PDF and also the important facts tomorrow as well in the next class of your revision. Yes, yes. Good, good. Okay. So yes, this will be in the application tomorrow morning in the app, and in the evening 6 p.m. you will be having the session in the YouTube. Fine. Okay. This is your YouTube. For the provisional mark sheet, I would provisional marks. I think here though I cannot open, but I will share one video. Don't worry, I'll share it. Yes. Then we have the Chalisa also. Chalisa will be uploaded in the night only. Fine. After your revision class is over on YouTube, after revision, we will be having the Chalisa uploaded, and one more important session will be there in the morning. Fine. 5:30 a.m. 5:30 a.m. on YouTube. You will be having this session on your exam day. Fine. Exam morning, which is your most expected questions. Most expected questions. Fine. So in total on YouTube, you have to attend these 3 classes, and for the paid subscribers, paid users, this is the additional class which you have to attend apart from the YTS. Well, yes, yes, this is the 9th morning session. No, now to there is no option of changing the center. Only once they have allowed, now they won't be allowing it. Okay, so thank you everybody for being patient listeners. I hope that you guys will attend the revision class also in order to have the comprehensive overview of the entire syllabus of PPB and gain the confidence tomorrow as well and hit the examination with your full force. Try to answer all the questions, all the 100 questions with confidence in the actual exam. Fine. So, yes, see you guys tomorrow at 6 p.m. Till then, goodbye, everybody. Take care. And if you have any doubt, feel free to ask.